The next topic of revision is registration of charges. So section 77 to 87, already 2 sections were omitted from the syllabus. So 9 sections and you can expect 5 marks from this topic, very small topic and scoring topic. Let's begin the discussion. So what is a charge? Charge means, for getting a financial assistance, if borrower is providing his properties or assets as a security to the lender, it is nothing but charge. So charge is nothing but providing properties as security. So from Companies Act point of view, charge means interest or lien created on property or assets of a company or any of its undertakings or both as security, and it includes mortgage. So yes, company here in this chapter, company stands in the position of borrower. For getting financial assistance, it may provide its properties or assets or any of its undertakings. Undertakings means group of assets engaged in a project. So to run a project, what are all the assets are required? That group as a whole, I can call it as undertaking. Or undertaking and property or assets of a company both as a security. So if I am creating some interest on the asset and if I am transferring that interest in favor of a lender, it is nothing but charge. And charge includes mortgage. That means, whatever the provisions that are applicable to charge are equally applicable to mortgage. So charge will comes into picture only whenever company borrows some money providing assets as a security. So here, yes, what kind of properties, can company provide as a security, or what kind of properties will be involved in the charge? Only tangible or intangible, sir? So both tangible and intangible, movable and immovable. So all are covered. But if company is providing movable property as a security, where the possession of movable goods lies with the lender, in that case registration of charge is not applicable, not mandatory. But where the company is allowed to use the goods, that means, hypothecation. So company is having possession of the goods, company can deal with the goods. In that case, registration of charge is mandatory. So charge can be created on both tangible properties and intangible properties. Charge can be created on movable property as well as immovable property. Sir, where the property should be situated? Either in India or outside India. So listen carefully, charge can be created on any property, whether it is situated in India or outside India. And we had two types of charges. One is fixed charge, the other one is floating charge. Fixed charge, floating charge. Sir, how can we differentiate, sir? Very simple. Answer these two questions. What kind of property? So is it identified property? Yes, sir. Identified property. So charge was created on the identified property, sir. Fixed in nature, sir. Then it is fixed charge. Sir, unidentifiable, sir. For example, closing stock, inventory, debtors, we can't identify them. They're fluctuating in nature. Their nature is fluctuating. So balances keep on increasing, balances remain constant, or balances may come down, sir. So in that case, the charge is floating charge. So this is first question. So what kind of property is involved? So at the time of creation of charge, if assets are identified, if assets are in identifiable condition, then it is fixed charge. Whereas if assets are in fluctuating nature, then it is called floating charge. Next one, dealing in the assets. Is company allowed to sell the charged property or not? If answer is no, sir, company is not allowed to sell the charged property, sir. It is fixed charge. Say for suppose I provided my immovable property as a charge. I created charge on immovable property. Now I can use that property, whereas I can't sell the property without consent of a money lender. In that case, it is fixed charge. Whereas if you take inventory without consent of banker, without consent of lender, I can freely sell them. I can freely deal with such a charged property. Then it is a floating charge. So what kind of property is engaged? And next one, is borrower allowed to deal with the assets or not? So these two questions will answer you whether it is a fixed charge or floating charge. And next one, my dear students, it is crystallization of charge. Crystallization. What is meant by crystallization, sir? Crystallization word is applicable only to the floating charge. So upon crystallization, the floating charge automatically gets converted into fixed charge. So it is no more a floating charge, it will be treated as fixed charge. That means the borrower is not entitled to deal with such a charged property. So the charged property will be 100% under the control of a lender. Are you getting my point, students? So crystallization will happen based on some events. Suppose, if company is if company defaults in payment of interest, if company defaults in repayment of principal portion, or if company stop doing business, or if company going into the position, going into liquidation position, in those cases, yes, the charge holder, sir, first of all, who is the charge holder? In charge concept, you can find two persons. One is borrower, the second one is lender. So in Companies Act, the charge holder is nothing but lender. That means in favor of whom you are creating charge. In favor of whom you are creating charge, that person is charge holder. And company stands in the position of borrower. Are you getting my point? So now the point is, the charge holder will come forward and he will crystallize the floating charge upon happening of few events specified in the agreement. Are you getting my point, students? So floating charge, as long as the charge is floating as long as charge remains as a floating charge, company is free to deal with the charged property, company can sell it. But the point is, upon crystallization, I repeat, upon crystallization, so it becomes fixed charge and charge holder will get control over the charged property. So that's it. This is all about basics of the charge. Next one, registration of charge. Here begins the first section, that is 77. So whenever company provide any asset as a security in favor of lender, it is the duty of company to register the charge with ROC. It is immaterial whether the property was located within India or it is located outside India. It is immaterial, but company should register the charge. So registration with ROC. For that, company need to file CHG1 or CHG9, whatever the case may be. They need to fill these forms and they need to file these forms with ROC. ROC, upon verification, it will register the same and issue registration of charge certificate. Understood? So now the point is, who will sign this CHG form, sir? So CHG form should be signed by two parties, borrower and lender. Borrower means company, lender means charge holder. On behalf of company, any director can sign it. AMP, key managerial person, can sign it. On behalf of charge holder, authorized person will sign the same. So what is the time limit, sir? What is the time limit for registration of charges? You can see here, when your charge was created. Sir, my charge was created before 2nd November 2018. So on 2nd November 2018, we got an ordinance, Company Amendment Ordinance 2018. So on that date, what happened, sir? So till that date, whatever charges created, for them, the original time limit is 30 days. Within 30 days of creation, that means the moment you created charge, how can we know, sir? You might have executed mortgage deed. So company and lender might have executed mortgage deed, right? So from the date of execution, within 30 days, register charge with ROC. If not, you'll be given additional 270 days. That means total how many days? 300 days. So within 300 days of creation, by paying additional fees, register the charge with ROC. Sir, I failed to register within 300 days of creation, sir. So on 2nd November 2018, the lawmaker gave you 6 months transition period. So even 300 days completed, no problem. You are given 6 months time period, comply all the provisions. So simply, register, file all the documents with ROC for the purpose of registration of charge. But whatever charges created on or after 2nd November 2018, they reduced the time limit. Original time limit 30 days is as usual, but extra time limit, extra 270 days, they reduced. How they reduced it, sir? So if you register charge within 30 days, normal fees is sufficient. Payment of normal fees, 600 rupees, say for suppose 600 rupees is sufficient. But if you fail to register within 30 days, you'll be given additional 30 days. That means total 60 days. But for this, you need to pay additional fees and you need to take consent of ROC. Sir, I failed to register within 60 days, sir. No problem. Lawmaker is giving you additional time limit of 60 days. So MCA, Ministry of Corporate Affairs. So the government of India is giving you additional 60 days. But for this, you need to pay normal fees as well as ad valorem fees, value based fees, Of course, ROC approval is must and should. So here you can find total how many days, sir? So 120 days. 120 days is the time limit for registration of charge. Previously it is 300 days. Now it is 120 days. So remember, original time limit 30 days, additional time limit 30 with the consent of ROC and on payment of additional fees. But if still you fail to register within 60 days, additional period of 60 days were provided. So who will register the charge? First obligation is on the company. Remember, first obligation is on the company. But if company fails to register the charge, then charge holder can file an application. Charge holder can file an application with ROC. The moment ROC receives application from charge holder, it straight away won't register the charge. It will intimate, it will give notice to the company, 14 days notice. 14 days notice means the company has to give response within 14 days. So now, company is having three options. Either company may register the charge on its own, or company may give response. Company may give reply, sir, we entered into the loan contract, but it was failed. We withdraw our application because of so and so reasons. Like that, company can file a response with ROC. Third one, company remaining silent. Company remains silent. So in first case, ROC will register the charge on application of the company. Second case, ROC will intimate the same to charge holder. Third case, if there is no response from the company, if there is no reply from the company, now ROC will register the charge according to the data submitted by charge holder. Now, for getting registration of charge, whatever normal fees or additional fees paid by the charge holder is entitled to get reimbursement from company, because it is the duty of company to register the charge. Since company failed to register the charge holder will pay that amount and charge holder will get reimbursement from the company. So first whose duty to register the charge? Company. Second, who can register the charge holder. And third one, purchaser. Suppose company entered into a loan contract with SBI. Company created charge on one immovable property and it got registered with ROC. Later, one person purchased this property. For example, Mrs. P Limited acquired that property. Now P Limited is treated as purchaser. So now it is the duty of P Limited to register the charge with ROC. If P Limited settles that loan amount, then no need to register the charge. Suppose if P Limited took both property as well as it took loan takeover happened. Now it is the duty of a purchaser to register the charge with ROC. How to register? I already told you. There are forms CHG1, CHG9, depending on if it is a normal loan, one form. If it is a debentures, if it is involved in debentures, then another form you need to file. What is the time limit? Just now I told you, original time limit 30 days. Extended period, according to the amendment latest, in the year 2022, the additional 30 days will be given, and then additional period of 60 days also given. So total time limit is 120 days. But for 120 days, you need to pay normal fees, additional fees, ad valorem fees. And ROC consent is also very much required. So verification of instrument of charge, that means signing of the charge instrument. So who will sign? On behalf of company, director, secretary, or any authorized person, a person having interest in the charge, and on behalf of charge holder, any authorized representative can sign the charge document. So extension of time limit already completed. Next one, issue of certificate of registration. Once once ROC receives the information either from company or charge holder or from purchaser, based on these details, ROC will register the charge and it will issue certificate of registration of charge to both borrower as well as lender. Once certificate is issued, it will be treated as conclusive evidence. That means all the applicable provisions, rules have been complied. Next one, subsequent registration not to prejudice rights of the charge holder. Suppose it is the duty of company to register charge within 30 days. However, company failed to register charge within 30 days. It somehow filed all the documents on 90th day. So delay of 60 days happened. Now in this case, on behalf of company, the director should file a declaration stating that, sir, due to delay in registration, due to subsequent registration, there is no impact, there is no prejudicial impact on the subsequent creditors, on the subsequent debts. Due to late registration, there is no adverse impact on the creditors, sir. So we are in a solvent position only. We can discharge all the debts which we borrowed during this time period. And finally, my dear students, so what happen if registration of charge is not done? What happen if registration of charge is not done? Actually, whenever you are providing immovable property as a security, under Transfer of Property Act, right? Under Transfer of Property Act, you need to register that mortgage with local registrar, with in registrar office. So this registrar is different. He is not ROC. So yes, property registrar. You need to register mortgage under Transfer of Property Act. But our Companies Act is telling that even if you register that mortgage under Transfer of Property Act, but if you fail to register the charge with ROC, I will treat that registration as null and void. That means whatever mortgage you created, whatever charge you created, if you fail to furnish the information with ROC, if you fail to register the charge, then the creation, the charge which you created will be treated as null and void. That means subsequently if company goes into liquidation and liquidator came forward to take all the properties of company to pay the loans, selling the property and whatever money is getting in order to pay the loans, at that point of time, he will arrange all the creditors in a line, like, secured creditors, unsecured creditors, preference shareholders, equity shareholders. But if your charge is registered, if your charge is registered with ROC, you will be treated as secured creditor, or else you will be kept under unsecured creditors. Accordingly, you will get the money. That means you won't get any right on the mortgaged property. So now who will be in the risk, sir? Obviously charge holder. Are you getting my point? So charge holder should take care that whether charge was registered or not, or else the mortgage which was created under Transfer of Property Act or under any other law will be treated as null and void. Yes, Companies Act is having that power to make, to invalidate, simply, to make that mortgage invalid. Are you getting my point, students? So next one, so registration of charge is compulsory. So next one, application for registration of charge by charge holder under section 78. I told you, if company fails to register charge within 30 days, then charge holder can directly file application with ROC. ROC will give 14 days intimation to the company with respect to registration of charge. If company register the charge, no problem, or else ROC, if no response from the company, if there is no response from the company, then ROC will register charge in favor of charge holder and he will issue certificate of registration of charge, and charge holder is going to get the money which he paid to ROC from company, as we already discussed. Next one, write about company acquiring property already subject to the charge. So this is all about purchaser concept. So if company is acquiring charged property, then it is the duty of a purchasing company to register the same with ROC, or else that mortgage will become void. That's it. Next one, modification of charge. Modification or amendment, alteration, one and the same. So at the time of entering into the loan transaction, borrower simply company, borrower, and lender, simply banker or any person. They might have entered into a contract which will contain terms and condition. So amount, loan amount, rate of interest, and tenure. So if there is any change in the terms and conditions of the contract, it is nothing but modification. So any modification happened to the charge, then once again section 77 is applicable. So it is the duty of company to register that modification, same as like creation of the charge. So what is the effect of modification, ma? A company should register such modification with ROC, same like creation of charge, or else modification will be treated as null and void. Originally I took loan of 60 lakhs. Later, due to my repayment history, due to my payment history, or due to increase in assets, the banker agreed to give extra finance. So he increased my finance to 90 lakhs. So originally I registered charge with 60 lakhs. Now I got extra 30 lakhs. Now I need to register this modification, or else 90 lakhs rupees charge will be treated as void, 60 lakhs rupees charge will be treated as valid. So and then if floating charge is getting converted into fixed charge, such kind of modifications also you need to register with ROC. Are you getting my point, students? So simply, very simple, section 79 modification is similar to section 77 registration of charge. At the time of creation of charge, whatever provisions are applicable, same provisions are equally applicable when you modify the charge. Next one. Of course, upon filing the documents, ROC will register the same and ROC will issue certificate. That certificate will be treated as conclusive evidence. Next one, section 80. This is all about doctrine of constructive notice. I told you constructive, deemed, notice, intimation. In incorporation chapter also I told the same point. When you file a piece of paper with ROC, it becomes public information. So when you are registering charge with ROC, when you are filing all the documents with respect to charge with ROC, it becomes public information. Now any person dealing with charged property, the court, the ROC, everyone assumes that he had knowledge of charge. So later he can't deny that, sir, I don't know, sir. I don't know. I thought that this property is free property. This is not charge hold property. I thought that this is a freehold property. That's why I purchased it. So I won't pay you loan. Like that, the purchaser is denied from making such statements. So rule of estoppel will apply. This is all because of section 80, that is deemed notice of the charge. Next one, write about reporting of satisfaction of charge. Once we register the charge and companies start paying the loan amounts, EMI. So company started paying the loan amounts. So the tenure is, for example, say for suppose 7 years. 7 years. 7 years completed, company repaid the loan. That means the purpose of creation of charge is satisfied. Why you created charge? So for getting loan, I provided some property as a security. Now when you repay that loan, that security, whatever you provided as a security, it is said to be satisfied. So similarly, the charge is satisfied. Now you need to register the satisfaction of charge with ROC. Same like, whenever you created charge, you need to file it with ROC. Similarly, whenever you discharge loan amount or whenever you sell that property to someone else, and finally, you came out of that obligation. You had no that loan obligation. In such cases, it is the duty of company to file satisfaction of charge with ROC. What is the time limit, sir? Original 30 days. First time limit 30 days. But if you fail to register within 30 days, no problem. You will be given additional 270 days. That means total 300 days. But for this, you need to pay additional fees. On payment of additional fees, you can file this form within 300 days of payment or satisfaction on payment. Discharge of loan, discharge of obligation. From that date, within 300 days, you can file, provided you need to pay additional fees. So once here, company, charge holder. Now company is filing satisfaction of charge with ROC. Listen carefully. Company is filing satisfaction of charge with ROC. ROC won't register that satisfaction until he get consent from the charge holder. So here ROC will give intimation to charge holder. 14 days intimation is given to the charge holder. Within 14 days, if charge holder gives no objection, then ROC shall register the satisfaction of charge. Suppose if there is no reply from charge holder, then also ROC will presume that yes, the charge has been discharged. The charge has been discharged. Accordingly, ROC will issue certificate of registration of satisfaction of charge. Here ROC will give memorandum of satisfaction of charge to the company. But this intimation of 14 days is not required when charge holder furnish a no objection certificate to company and company furnish the same no objection certificate to the ROC. That means if charge holder give NOC to company, come on, get your satisfaction of charge registered with ROC. So this is our no objection. Like that, if charge holder furnish that information to company and if company file the same with ROC, then this 14 days intimation is not required, or else ROC can't register the satisfaction of charge without giving notice to charge holder. Is it clear, my dear students? So company's duty to file satisfaction of charge with ROC. What is the time limit? 30 days. Normal fees. 30 days completed, sir. Additional 270. That means total 300 days. But you need to pay additional fees. However, if company failed to furnish this information, suppose 300 days also completed, company failed to file this information. Now ROC on suo moto, that means on its own motion, can register the satisfaction of charge. What it means, sir? How ROC know about satisfaction of charge? Very simple. I took loan for 7 years. 8 years completed or 9 years completed, but still there is no response from the company. Now ROC, through its authorized sources, it may conduct inquiry. It may conduct, investigation. So upon the information what it receives, suppose the charge is already discharged, sir. Now ROC, recording the same facts in the register, it will issue certificate of registration of satisfaction of charge. So this is ROC suo moto power. Just go through this box, you'll come to know each and every point. So this point, powers of ROC, right? So once you file these documents, ROC will issue certificate of satisfaction. Once company receives certificate of satisfaction, now the property is freehold property. Company can mortgage that property with a new lender. So now section 83 also I completed, ROC upon preliminary investigation, if it comes to know that the charge has been discharged, the charge has been released, the properties has been released from the charge. Now on suo moto, it will issue certificate of satisfaction of charge and it will furnish information to the affected parties. Finally, it will issue the certificate. Understood? And 2-3 small points are pending, that is section 84. See, in this section 84, suppose imagine company as well as charge holder, they might have entered into an agreement stating that if company fails to pay 2 months installment consecutively, terms and conditions, I'm telling you terms and conditions. If company fails to pay 2 installments consecutively, then charge holder can appoint a receiver who can take right on the property, who can take possession of the property, and he can collect the revenue of the property, whatever amount, whatever income earned by the property, the receiver can collect it and he will appropriate that amount against loan. Simply he will take charge on the property. He will take control over the property. So the moment company fails to pay installment consecutively consecutive 2 months, then charge holder can appoint receiver. Like that, you can place conditions in the charge document. You can place conditions in the contract. And suppose, company really it failed to pay installments 3 months consecutively. As per this agreement, charge holder is having power to appoint receiver, and charge holder appointed receiver. So this receiver will take control over the property. Whatever rental incomes, company is getting from the property, the receiver will take the amount and receiver will adjust that amount against loan. And the moment, company start paying the loan, the role of receiver will come to an end. Now, section 84 is levying a responsibility on the charge holder. It is levying responsibility on the company. So, what responsibility, sir? What responsibility? The moment such receiver was appointed, within 30 days, so they need to communicate with ROC with respect to appointment. And the moment, the role of receiver comes to an end, again you need to file information with the ROC. Are you getting my point? Now ROC shall register the same. So appointment of receiver, removal of receiver, everything ROC will record the same. Are you getting my point, students? So if any person, charge holder appoints such receiver or person under any power contained in any instrument, he shall give notice of such appointment to the company and the ROC along with the copy of order or instrument within 30 days from passing the order or making the appointment. Understood, ma? So responsibility, simply section 84 is whenever official receiver is appointed or whenever official receiver was terminated, so the charge holder should give notice to both company as well as ROC. ROC will record the same and he will issue the certificate. Next one, write about punishment for contravention with provisions of registration, modification or satisfaction of charge. Simply, whenever a violation happened under this chapter, chapter number 5, it's not 5, chapter number 6, registration of charges. So violation under registration of charges, chapter 6, the punishment under section 86 gets attracted. What is the punishment, sir? No, company is liable with penalty of 5 lakh rupee and officer who is in default shall be liable to a penalty of 50,000. And if they do fraud, that means, modifying the documents. Already I provided one property as a security in favor of SBI. Now morphing the documents, providing same documents to the Axis Bank or to some other person. Simply, if my intention is to fraud the public, to fraud the lenders, then I'll be punished under section 447. Section 447 punishment, everyone is aware of the section 447 punishment. So depends upon, public interest. If public interest is affected, then fine would be minimum, fine would be amount involved in the fraud, maximum 3 times of the amount involved in the fraud. What is the punishment under section 447? Fine, minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. And imprisonment, minimum 3 years, maximum 10 years. Minimum 3 years, maximum 10 years. So public interest is safe, sir. Public interest not affected. In that case, you need to check whether it is a greater magnitude or lesser magnitude. That means amount involved in the fraud, you need to compare it with rupees 10 lakhs or 1% of turnover, whichever is less. So just compare amount involved in the fraud with 10 lakhs or 1% of turnover, whichever is less. If it is less than this limit, then it is lesser magnitude. The punishment is very simple: imprisonment up to 5 years or fine up to 50 lakhs or both. I'm not writing in detail, just I'm just telling you this is a revision class. I'm not writing in detail, just follow my words. Imprisonment up to 5 years, fine up to 50 lakhs or both. But if it is a greater magnitude, that means, greater than or equal to 10 lakhs or 1% of turnover, whichever is less, then same punishment, instead of 3 years imprisonment, it is 6 months imprisonment. Minimum 6 months imprisonment, maximum 10 years imprisonment. With respect to fine, minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. Next one, powers of central government. This is like a residual section. So it's almost like, revision of income tax return. I furnished an income tax return. I found some mistakes in my income tax return. Now what I'll do, I can revise it. For that, government approval is not required. Within the time limit, I can revise income tax return as many number of times I can. But here, if you file any information with ROC and you found, if you find any mistake in such forms, then with the approval of government, you can revise them, you can modify them. So any misstatement or any omission in the particulars of the charge, previously made to the register, so with the approval of central government, you can modify them. And moreover, when the time limit is over, suppose within 300 days I need to register satisfaction of charge. Suppose 300 days completed. Now file an application with CG. With CG approval, you can file satisfaction of charge with ROC. So central government power in two cases. One is delay in filing satisfaction of charge, and the second one is omission or any misstatements in the charge documents which were already filed with ROC. So this is all about government powers. So with this registration of charges revision completed. Very simple, section 77 company duty. You need to remember time limit. Section 78 charge holder right to register the charge. Section 79 acquirer, purchaser has to register the charge. 80 it is all about doctrine of constructive notice. And then we saw satisfaction of charge and then appointment of official receiver. Finally, punishment for violation of this chapter and powers of central government. Very simple chapter. Don't neglect. Read twice. Next topic, acceptance of deposits. So section 73 to 76A. You can expect 5 marks from this topic. Very small topic, and you can score maximum in this topic. So let's begin the topic of deposits. So this entire chapter, chapter number 5, deposits and company rules, company acceptance of deposit rules. This particular chapter and these rules are not applicable to, remember this point, there is a chance of getting a practical question. These are not applicable to NBFC companies, banking companies, housing finance companies, and companies specified by CG in consultation with RBI. So beginning of chapter only I'm telling you this point. They may ask a practical question. A company engaged in NBFC want to accept deposits from public. So how much percentage of paid up share capital and reserves and surplus, so they can accept deposits. Simply to what extent they can accept deposits, or what are the procedural formalities. They may ask you. You ignoring this word, NBFC, banking company, housing finance company, if you ignore this word and if you write detailed procedure, you'll get 0 marks. You're going to get 0 marks. So this entire chapter is not applicable to 4 companies: NBFC, housing finance companies, banking companies, and then companies specified by central government in consultation with RBI. And deposit, obviously it is one source of finance. To meet their very short-term requirements, yes, company will accept deposits from the public as well as from the members. So which company will accept deposit from public, which company can accept deposit from members, all these points and procedure for acceptance of deposits we are going to cover in this marathon. So first of all, what is meant by deposit? Any receipt of money by way of deposit or loan, or in any other form, it is called deposit. So the definition is very clear. Any receipt of money in the form of, that receipt is not, because of sales, because of providing services. It should be in the form of deposit or loan, or in any other form. We call it as a deposit. But deposit excludes certain categories. Certain categories of amounts were excluded from the definition of deposit. That means this chapter and company acceptance of deposit rules 2014 are not applicable to the exempted deposits. So it is very important to remember the exempted deposits. Let's begin the exempted deposits. Here I'm going to give you notes. You need to remember. No need to reproduce them in the exam, but there is a chance of getting a true or false question or a multiple choice question. So that's the need. So you need to remember, and I'm going to write it on the notepad so you can copy it. So exempted or exclusions, you can remember in this manner. So if you accept any money from the following institutions, namely government, local authority, statutory authority. Now government means central government, state government both, and then local authority, statutory authority. Any loan you receive from them, any receipt of money from them is not a deposit. Next one, foreign government and foreign bank, foreign multinational multilateral financial institutions according to FEMA guidelines. So foreign multilateral financial institutions subject to FEMA regulations. And then next one, from public financial institutions, PFI, public financial institutions. Next, from banks, and next from other companies, simply intercompany borrowings. So from holding company or from subsidiary company, from other companies. So if you receive any amounts from these institutions, they are not categorized as deposit. So remember these 5 names. And the next one is from instruments point of view. Institution completed from instruments point of view. So if you collect money by issuing these instruments, they are also not treated as a deposit. First one, commercial papers. They serve as short-term borrowings, So to meet the liquidity crunch, companies, banking companies, financial institutions are allowed to issue commercial papers. So they are short-term promissory notes, and they are also not categorized as a deposit. And then subscription money with respect to any kind of security. Subscription money, if you make allotment of securities, then it is not a deposit. If you fail to make allotment, then you need to refund within 60 days. You need to make allotment within 60 days of receipt of money. Within 60 days of receipt of money, if you are making allotment, then it is not treated as a deposit. Or else refund within 15 days from the expiry of 60 days. Refund within 15 days from the expiry of 60 days, then also it will not be treated as deposit, or else it will be treated as deposit. Next one, secured bonds, secured debentures. I repeat the word, secured debentures are also not treated as deposit. Sir, convertible debentures, but that conversion should happen within 10 years from the issue. 10 years. So even though if they are unsecured, but if they are convertible, then also they are not treated as deposits. Next one, listed debentures. Listed debentures are also not treated as deposits. So that means unsecured, non-convertible, unlisted debentures, straight away they will be called as deposit. It was not there, but we can understand. So secured, not a deposit. Convertible debentures, not a deposit. Listed debentures, not a deposit. So these are the instruments. Next, from person's point of view, if you receive money from the following persons, then also it is not treated as deposit. So who are they? First one, directors of the company. In case of private company, relatives of director. In case of private company, in public company, relatives are not covered. And the next one is unsecured loan from promoters. So straight away I won't tell that they are not deposits, but some conditions are there. Suppose when you receive loan from directors should furnish a declaration. They need to give a declaration stating that this money belonging to us. They are not the money which we are lending to the company, it is not out of borrowed funds, it is from our own funds. Like that, they need to furnish declaration, then only it is not treated as deposit. Even in case of unsecured loans also, this unsecured loan should be given because of stipulation kept by a bank. any bank or financial institution, they put a condition that yes, we can grant loan to the company provided promoters should contribute some unsecured loan to the company, and this unsecured loan is not treated as deposit till company repay loan to bank or financial institutions. Once company repay complete loan to the bank, from that point onwards, this unsecured loan from promoter will be treated as deposit. So how long, unsecured loan from promoter is not treated as deposit? Till the company repay loan amount to the bank or financial institutions. And then, employees. Next one, employee security deposit. Employee security deposits. Employee security deposit, but here we had two conditions. Condition one, maximum 12 months salary, and next one, non-interest bearing security deposit. If these two conditions are satisfied, then any deposit received from the employee in the form of security deposit, any amount received from employee in the form of security deposit is not treated as deposit. So if it is more than 12 months salary, then it is a deposit. Sir, less than 12 months, sir, but company is paying interest on the deposit, sir. Now also we call it as deposit under this chapter. Next one, from business point of view, all trade advances, that means whatever amount you receive from the debtors is not treated as a deposit. And interest advance received in the form of trust, no, advance, it's not advance, amount deposited with company, and company is like a trustee. So company having fund in the position of trustee, company holding fund in the position of trustee, and company is not paying any interest. So non-interest bearing amount held by company in the position of trustee, so this is also not treated as deposit. And finally, we are left with one category, that is companies. Following companies, even they receive amounts in the form of loan or in the form of advance or in the form of deposit, those amounts are also excluded from the deposit. So what are those companies, sir? So Nidhi company, you all know, for cultivating the habit of savings among the among the members in the rural areas. So we had a concept called Nidhi company. And then next, chit fund companies. Even if they receive money from their customers, clients, it is not treated as a deposit. Next, startup company. There is interesting point in startup company. Here, under single tranche, so single transaction, company should get 25 lakhs or more. And this would be convertible note. By issuing a convertible note, which should be converted within 10 years. Recent amendment is there. Previously it is 5 years, but now it got increased to 10 years. You can go through it. And then collective investment schemes. Companies conducting these kind of schemes. Next one, mutual funds, alternate investment schemes, mutual funds, venture funds, real estate venture funds, real estate investment trust, etc. Alternate investment scheme, mutual funds, real estate investment trust, etc. So all these amounts, received by them is treated as exempted deposits. So now I hope everyone can easily remember these exclusions. Government, amounts received from government, local authority, statutory authority, amounts received from foreign government, foreign bank, foreign multilateral financial institutions, then public financial institution, loans received from banks, borrowings from intercorporate, simply intercorporate loans, and amount received by issuing commercial papers, subscription money up to 60 days of receipt of money is not a deposit. And if you make allotment, it is not a deposit. Or else if you need to refund within 15 days, then also it is not a deposit. But if you fail to refund within 15 days after expiry of 60 days, then it will be treated as a deposit. All secured debentures, not a deposit. Convertible debentures, which should be converted within 10 years from issue, not a deposit. And then listed debentures, listed on any one of the recognized stock exchange. And then amounts received from the following persons, amounts received from in the form of because of doing business, and amounts received by the following companies, amounts received by the following companies. All these are not at all considered as deposits. So you can easily highlight these points in a material. When you're going through the material, you can easily identify them. So these all are institution, governments, foreign governments. In that manner only our material has been drafted, you can see here public financial institutions, and then commercial papers, intercorporate loans. So I kept 6 point ahead of fifth point, and remaining you can see these all are the securities only. Just give one time reading, very important. And then loan from directors, persons, I categorize them as persons. Bonds and debentures I categorized as instrument. So for simple remembering the points, I gave that notes. You can follow our material, it is sufficient. Convertible debentures, non-convertible, but if they are listed on a recognized stock exchange, then also not a deposit. And then from trust and from employees, two conditions to be remembered. One is security deposit, 12 months salary, and non-interest bearing security deposit. Advances from the commercial transactions, business advances. Here you need to remember, it should be adjusted within a period of 365 days. Sometimes you can get advance for immovable property, they are also not treated as deposit. Security deposit for goods or services, advances for long-term projects, advance for AMC contracts. And then sectorial permitted advances, you can see in prospectus chapter also, advance for subscription, right? And then deemed deposits, we discussed this point also, advance for subscriptions. Any advance for subscription towards publication in any media against receipt of such publications, it will be treated as revenue to those companies. Understood? Next one, loan from the promoters. I told that conditions. So bank or financial institution should put a stipulation. Because of that condition only, they should lend some money to the company. And as long as they repay loan to the bank or financial institution, loan from unsecured loan from promoters are not treated as deposits. Nidhi company, chit fund company, collective investment schemes, startup companies, and then REIT, IFIT. So I covered each and every point, my dear students. Very, very important to remember these points, because every 2 attempts out of 3, 2 out of 3, there is a question on exempted deposits. So that's what, very important. So I took almost 12 minutes to explain the same. Next one, explain the meaning of depositor under rule 1D of the acceptance of deposit. So who is a depositor? The person who makes deposit, he is called a depositor. But here you need to understand from eligible company point of view. What is eligible company, sir? It should satisfy 3 conditions. One is public company, and next one, it's net worth 100 crores or more, and its turnover 500 crores or more. So if any public company satisfying these 2 conditions, then we call it as an eligible company. Eligible company can accept deposits from both members as well as public. I repeat, eligible company can accept deposits from both members as well as public. So from eligible company point of view, who can be the depositor, sir? Either member or public. Other companies, other than eligible company, for other companies, only member can act as a depositor. Only member can act as a depositor, because other companies can accept deposits only from the members. Eligible company can accept deposits from both members as well as public. Next one, write about prohibitive provisions and companies that are exempt from the prohibitive provision for acceptance of public deposits. Already told you at the beginning of this chapter, any banking company, NBFC, housing finance company, and companies specified by CG in consultation with Reserve Bank of India. Next one, write about provisions relating to acceptance of deposits from members. This is applicable to all the companies. Companies which are accepting deposits from members, they need to satisfy these conditions. First one, as usual, you need to take approval from the members. Ordinary resolution is sufficient. So why? Why? Because company, no part of profits company is paying as interest to the deposit holders. Actually, this money is belonging to the equity shareholders. So money belonging to shareholders, out of that money you are paying some money to the deposit holders. That means whose interest is getting diluted? Equity shareholders. So members consent is necessary. Next one, you need to prepare a statement called circular. So when you make public offer, prospectus will come into picture. When you make offer to the identified persons up to 200, then private placement will come into picture. If we are making offer of shares to the existing members, then there comes rights issue, there comes letter of offer under rights issue. And whenever you want to accept deposits, here you need to make a statement, you need to circulate a statement. We call such statement as circular. So in that circular, the statement should be there with respect to position of the company, financial position, credit rating. It depends upon the performance of the company. It depends upon the company payment capacity. So capacity of company in meeting the liabilities simply on due date. Are they capable to repay or not? So what is the past track record? What is the position of the company? How the company can generate revenue, how the company can generate profits. Depending on all these factors, credit rating agencies will give credit score to the companies. It depends on, it's like AAA plus AAA and AA plus AA, A plus A, like that. Certain rating will be provided. That rating should be circulated, and outstanding amount of deposits and total number of depositors as on the date of circular. Next one, such other particulars as may be prescribed. So all these points should be there in circular. This circular should be first filed with ROC, at least 30 days before circulation among the members. Next thing, you can give it to the members. So yes, you are asking, so simply you're making an invitation to offer. So whoever interested, the members whoever interested, they will deposit their savings in the company. And mode of sending the circular, you already know, section 20, speed post, electronic mode, in any format, but there should be a proof of delivery. Yes, we delivered this copy. There should be some kind of proof. Advertisement in newspaper. And finally, CA certificate with respect to no defaults. CA certificate with respect to no defaults. So only a company which is regular in repaying deposits principal and regular in paying interest on deposits, only those companies are permitted to accept deposits. So a default company is not allowed to accept deposits. So regular in paying interest, regular in repaying principal, so only such companies are allowed to accept deposits. But the point is, even if default happened, upon rectification, wait for 5 years. So after completion of 5 years, you are allowed to accept a new deposits. So now CA will give a certificate that company had never committed default, or company committed default but 5 years completed. Last 5 years company didn't commit any default. Like that, CA has to give a certificate. Chartered accountant in practice should give a certificate, and you need to circulate this certificate along with circular. And finally, such circular shall be issued on the authority and in the name of board of directors. So simply, a single director giving circular is void. That circular should be issued under the authority of board of directors. Simply, board resolution is must and should. That means first ordinary resolution allowing company to accept deposits. Now preparation of those documents, and these documents require approval of board of directors, board resolution. And whatever you're making advertisement or whatever circular you're giving, it will have a validity period. The validity period is 6 months from the closure of financial year, or actual date of AGM, or due date of AGM, whichever is earliest. So most probably, companies used to conduct general meeting on 30th September only. That means, 6 months from the closure of financial year only. Majority of the cases, I'm not telling all the cases, I'm telling you majority of the cases, these 3 dates look like 30th September of every year. But the point is, the circular which you issued, the advertisement which you made is having a validity of 6 months from the closure of financial year, actual date of AGM, due date of AGM, whichever is earliest. And the prospectus is valid for a period of 90 days. Shelf prospectus is valid for a period of 1 year. So similarly, circular is valid for a period of 6 months from the closure of financial year, due date of AGM, actual date of AGM, whichever is earliest. And then for every financial year, we need to issue fresh circular. And the circular is valid till so and so date, just now we discussed. So before giving circular to members, we need to file it with the ROC. Next one, deposit repayment reserve account. So this is like a provision. So every year, out of divisible profits, the profits which are available for the distribution and payment of dividend, out of the profit you need to reserve some funds. How much, sir? 20% of amount of deposits maturing the financial year. So my deposits, I'm going to repay some 100 crores deposits in the current year. Now 100 crores into 20%, 20 crores. 20 crores. I need to keep a reserve. I need to reserve them. Listen carefully, ma. So with respect to the upcoming financial year, the amounts which were maturing in the upcoming financial year, on that 20% you need to keep a provision. Keeping provision only not sufficient. You need to invest that fund in a highly liquid securities. That means which you can, by selling those securities, you can easily mobilize money. So transfer of the security should be very, very high. That means, highly liquid assets. In fact, highly liquid assets. So invest 20% of amount of deposits maturing during the financial year on liquid assets. So once again, I'm telling you, you can identify the difference. Provision with respect to next financial year, whereas deposit is with respect to current financial year. So we are in the financial year 2022-23, right? So amount of outstanding deposit, 20% of outstanding deposit maturing current year, you need to invest that money in separate securities where you can easily sell them and you can easily get money to meet the liquidity crunch, in repaying the deposits. But whereas, with respect to provision, keeping aside, that should be with respect to upcoming financial year. That means, financial year 23-24. With respect to provision next year, with respect to deposit in liquid assets current year. Next one, certification as to no default in repayment declaration. I told you that yes, CS certificate is required and this should be circulated along with the circular. Next one, provision of security. If you are accepting secured deposits, I repeat, if you are accepting secured deposits, then you need to provide adequate security. So amount covering both principal and interest amount, you should provide security. Sir, we are not accepting security deposits, sir. We are accepting unsecured deposits. Then clear disclosure of unsecured deposits should be there in circular. You need to give a circular disclosing, yes, we are accepting only unsecured deposits. But if you are accepting secured deposits, whatever assets you are providing as a charge, you need to register the charge with ROC according to chapter number 6. Next one, relaxation for private companies. So far we discussed conditions, ordinary resolution, preparation of circular, right? Next one, contents of circular, no default by a CA, deposit repayment reserve account, and then maintenance of liquid assets, no default certificate by CA, I already told you, ROC filing. All these conditions you need to follow for accepting deposits from members. But out of these conditions, certain conditions were exempted to the following companies. What are those conditions? Issue of circular, ROC filing, deposit repayment reserve account, and no default certificate by company. These are not applicable to whom, sir? Private company accepting deposits up to 100% of paid up capital and free resource and securities premium account. So if you're accepting deposits up to 100% of paid up share capital plus free reserves plus security premium, no need of these conditions. So I'm going beyond 100%, sir. Then you need to follow these conditions. Startup companies, for doing ease of business, for easy doing of business, these conditions were eliminated up to 5 years from incorporation. And other private company, but that other private company should satisfy 3 conditions. It should be neither associate nor subsidiary to other company, and the loans, the borrowings from banks, financial institutions, or any other body corporate is less than 2 times of paid up share capital or 50 crores, whichever is lower. And with respect to these borrowings, there should be no default. With respect to these borrowings, there should be no default. So these kind of private companies can accept deposits more than 100% without complying the aforesaid conditions. Now, to claim these privileges, these companies should file DPT3 form with ROC in a specified manner, in a prescribed manner, and within the prescribed time limit. Understood, ma? And specified IFSC companies also had this kind of privileges. The only reason is ease of doing business. That's it. Next one, repayment of deposit. Deposits you accepted. Now you are at maturity period. Now what you should do? You need to repay deposit amount. You need to pay interest on deposit. So whatever promise you made, fulfill the promise, or else aggrieved party can file a petition with NCLT. Now NCLT will order you to pay the amounts. Understood? So the amount which you kept aside as a provision under deposit repayment reserve, you should not use that amount for any purpose other than repayment of deposits. So these are special purpose funds. The fund should meet that special purpose only. You can't pay dividends from that fund. You can't use that fund for any other purpose. Next one, tenure for deposits. Minimum, remember minimum 6 months, maximum 36 months. So no company is allowed to accept deposits for a period less than 6 months, for a period more than 36 months. But sir, my requirement is very short term, sir. I need funds only for 4 months or not for 6 months. In that case, you had an advantage. You can accept deposits up to 100% of paid up share capital plus free reserves plus securities premium. But this money you should accept for minimum 3 months. Minimum 3 months. This is the maximum amount you can accept a deposit for a shorter tenure of 3 months. 3 months. Understood? So actual general rule 6 months to 36 months. But exceptional cases, you can accept deposits for a period less than 6, but it should be more than 3. With respect to limit on amount, it should not exceed 10% of paid up share capital plus free reserves plus securities premium. Next one, coming to the maximum amount of deposits, I'll give you a single chart where you can remember each and every point, ma. I'll give you a chart on this. So maximum amount of deposits. So here I'll write, section 73, which can accept deposit only from members. Section 76, an eligible company. 76 is all about eligible company. And here, others. So now, who can be depositor? Who can be depositor? Only a member. Here, member as well as public. Now maximum amount of deposit. Maximum amount of deposit which you can accept for 36 months. 36 months is 35% of paid up share capital plus free reserves plus securities premium. 35% of paid up capital plus security premium plus free reserves. Whereas for private companies, IFSC public company, IFSC public, as well as all private companies, including IFSC, all private companies, they can go up to 100% of paid up share capital plus free reserves plus securities premium. Understood. But they are required to file a prescribed form with ROC. Now coming to the eligible company, from members they can accept up to 10% of paid up share capital plus free reserves plus security premium. Whereas from non-members, simply public non-members, it is 25% of paid up share capital plus free reserves plus securities premium. Interchange not possible. That means from members I'll go with 35%, 25%, sir. From non-members 10%, sir. It is not possible. It is not at all possible. But when you take government company, 35% overall limit, 35% overall limit from public as well as members, overall limit is 35% of paid up share capital plus free reserves plus securities premium. That means they can accept 35% from public, they can accept 35% from members, or 25-10 or 20-15 or 15-20. Permutations and combination is possible in government company, whereas that is not possible in eligible companies which are other than government companies. So this is the maximum amount of deposits which a company can accept from the eligible depositors. Understood, my dear students? But as usual, private company which is a startup up to 5 years of incorporation, and a private company which fulfill those three conditions, it is neither associate nor subsidiary to other entities, and which has borrowings less than twice of the paid up share capital or 50 crores, whichever is less, and no default with respect to those borrowings. So these kind of companies can accept deposits without any limit. Means, so 1000% of paid up share capital plus free reserves plus securities premium, or 10,000% or 1 lakh percentage, there is no limit. Unlimited amounts they can accept. So you can see in the material 35% concept, 100%, and there is no limit to the two companies. So after exempted deposits, it is very important to note the limits of deposits. Conditions you can easily remember, circular, members approval, board approval, ROC filing, no default certificate from CA, and then deposit repayment reserve account 20%. You can easily remember, but the limits and exempted deposits are very, very important. And finally, appointment of trustee for depositors. So being an outsider, deposit holders, outsiders, they don't know about internal affairs. So to protect their interests, a company must have depositor trustee. So qualifications of depositor trustee is almost similar to the qualifications of debenture trustee. You can have an overview. Next one, filing of application by the depositor. So for making deposits, they need to file application. So in writing, so simply they can't transfer funds as they like, so they need to file an application. And yes, company can issue deposit certificate in joint names but not exceeding 3. Remember, 3, maximum 3. In case of joint deposit holders, the number should not exceed 3. Maximum 1 certificate can be held by 3 people jointly. And then they can have a nominee. And then issue of deposit receipt. So company should issue deposit receipt within 21 days from the receipt of money or realization of check or application for renewal. So remember this time limit also, 21 days. In case of share certificate, the time limits is like 2 months, 1 month, 6 months for debentures. Did you remember? But for deposit receipt, max 21 days. Within 21 days, company should issue deposit receipt. 21 days from when? Receipt of money. In case of check, realization of money. If it is for renewal, then when they filed an application for renewal, you need to remember. Next one, a register of deposits. So company has to maintain a register with respect to their deposit holders. So yes, date of acceptance, date of payment of interest, date of maturity, all those particulars they need to maintain. Premature payment is also permissible, but 1% will be deducted. If agreed interest, from agreed interest 1% will be reduced. That concept also you can find in the material. And filing of returns of deposits with the ROC. So every company accepting deposits, they need to file DPT3 with ROC. So once you accept deposit terms, you are not allowed to modify the terms of circular without consent of deposit holders. Understood? And then if you fail to repay, if you fail to repay deposits within a time, within the prescribed time, then you need to pay penal interest of 18%. Finally, when you override any of the aforesaid provisions, then this is the punishment. Company and every officer, first 5,000 rupees maximum penalty, and still if you are not rectifying it, if you're still not making any rectification, and if that contravention is continuing in nature, then 500 for every day during which such contravention continues. Failing to send deposit receipt, example, failing to send deposit receipt within 21 days. So within 21 days, if company failed to send deposit receipt, first punishment, it would be up to 5,000. And you made a delay of 10 days. For 10 days, 10 into 500, extra 5,000. So that is the total punishment on company as well as officer who is in default. Officer who is in default. Next one, this point already we covered in the above question. This question you can see, fifth question, you can find these points, but a separate question, we framed it as a separate question. Next one, eligible public companies. So this one also I covered. So which company comes under eligible company? Public company, net worth 100 crores or more, or turnover 500 crores or more. So let me correct the point which I told you. I told that eligible company means, just wait, just listen. Eligible company, here I didn't mention. So yes, previously I told you eligible company means public company. That public company should satisfy any of these conditions: net worth 100 crores or more, turnover 500 crores or more. So let me rectify that point. Initially I told you that net worth and turnover, but it's not and turnover, net worth or turnover, any one limit satisfied, then we call it as eligible company. So it should obtain approval from the members in the form of special resolution. But remember carefully, many students had a doubt at this point. So ordinary resolution is sufficient in a note point, whereas special resolution is required. What is the difference, sir? My total debts means debentures, maybe loan from banks, maybe deposits. If all these amounts, outstanding plus proposed, if they are within the limit of section 180 subsection 1 clause C, that means up to 100% of paid up share capital plus free reserves plus securities premium. Which one? Debts proposed plus outstanding. Proposed plus outstanding. So these proposed debts plus outstanding debts, if they are within 100% of paid up share capital plus free reserves plus security premium, then special resolution is not required. If they exceed 100%, then special resolution is must. Are you all getting my point? So my outstanding amounts plus proposed deposit, if it is exceeding 100%, then special resolution is required, or else ordinary resolution is sufficient. Don't get confused. When you read, read it independently. General rule, if it is within the limits, OR is sufficient. Exceeding the limits, special resolution is required. And for public, eligible company, same whatever we read under section 73 subsection 2, same conditions will apply, but additional condition is they need to obtain credit rating from credit rating agencies every year. As long as they had deposits, as long as they show deposits in their financial statements, they should get credit rating every year, and they should advertise it, they should publish it into newspapers. So this is the only additional condition you can get here. So remaining all the points, we covered it. We covered all the points. So deposits in joint name, nomination, deposit receipt, everything we covered under section 73 subsection 2. And finally, section 76A. Whenever you violate provisions of 73 subsection 2 and 76, then punishment will be imposed on 76A. For example, you accepted deposits but you are not paying them. You are not returning money to the deposit holders. You are not paying interest on deposits. In those cases, punishment will be attracted. So what is the punishment, sir? For company, 1 crore rupees or twice 1 crore or 2 times of deposit accepted, whichever is lower. 1 crore or 2 times of deposit accepted, whichever is lower. This is the minimum fine, minimum punishment. Maximum 10 crores, maximum 10 crores. So don't get confused with three limits. There we had only two limits. One is 1 crore or twice the amount of deposit accepted, whichever is lower. This is the minimum penalty. Coming to the maximum penalty, 10 crores. This is the frequency. Suppose I accepted deposits of 10 lakhs and I made default with respect to 10 lakhs. Now my minimum punishment is 1 crore or twice the 10 lakhs. That means 20 lakhs. 1 crore or 20 lakhs, whichever is less, means 20 lakhs. So minimum 20 lakhs, maximum 10 crores. Minimum 20 lakhs, maximum 10 crores. Suppose I accepted deposits of 100 crores. I made a default of deposit of 100 crores. Now my minimum punishment is 1 crore or 2 times of 100 crores, whichever is less, means 1 crore, maximum 10 crores. And with respect to officer in default, imprisonment plus fine. Imprisonment up to 7 years, fine, minimum 25 lakhs, maximum 2 crores. Maximum 2 crores. But if you are making, if you want to default any person like income tax department, so you received you received service income, you received amount under sales, but you're canceling the sale service income, putting them under deposits, showing them under deposits so that you can avoid tax. Or some long-term loans you are putting under deposits to attract more loans from the banks. So simply, if your intention is to make fraud, then you will be punished under section 447. So with this, my dear students, deposits completed. So let me recap you quickly. So here we categorize companies into two types: eligible company, other than eligible company. In eligible company, you can see they can accept deposits to the extent of 10% from members, 25% from non-members. Other companies, they can accept 35% from members only. For startup companies and companies where there is no private company, IFSC public company, they can go up to 100% of capital plus reserves plus securities premium. And then we discussed one more point. So no limit, there is no limit to the certain companies, like a startup company up to 5 years of incorporation. Next, a private company which is neither associate nor subsidiary to another body corporate, and total borrowings is less than 2 times of the paid up share capital or 50 crores, whichever is less, and no default with respect to repayment of those borrowings. So these two companies can accept deposits without any limit. And then we had discussion on procedure for acceptance of deposits. So simple conditions you need to remember: members approval, circular, board resolution, ROC filing, CS certificate, deposit repayment reserve account, depositor trustee, and then payment of interest on timely basis, repayment of money within the specified time. We covered all these points. And then we discussed exempted deposits. Finally, we completed punishment in case of violation of 73 subsection 2 and section 76.
So the next chapter is the appointment of auditors. This is also called as company audit chapter. Nothing but appointment of auditors. We are discussing all appointment related provisions, rules and regulations. Getting it? And I hope many of you have grip on this chapter. Mostly. Okay. So I'll go a little faster now. So in this chapter, we are going to discuss these sections: 138, 139, 140, 141, 142, 143, 144, 145, 146, 147, 148. These are the sections that we have. This is regarding internal audit. This is regarding appointment and reappointment of auditors. This is regarding removal, resignation. This is regarding qualifications and disqualifications. Correct? This is regarding remuneration of auditor, rights and duties of auditor, prohibited services, yes or no? And this is regarding signing of the audit report, duty to sign. And this is regarding duty to attend general meetings, not AGM. General meetings, everything is covered. 147, penalty provisions. 148 is regarding cost audit. 148 is regarding cost audit. Now, first we'll start with qualifications and disqualifications of an auditor. So what are they saying actually? See, once you qualify as a CA, you can either take up the practice or you can either take up employment, or you may do some other business completely, outrightly different from CA. Now, if you decided to take a practice, first you should have a membership number. By qualifying CA final, you will not become member. You need to obtain membership number by paying specifically some fees. Okay, there is a member enrollment fee, something. And you are not eligible to practice directly. For practice, again, you have to pay separate fee. Certificate of practice. You see, the practice is CE, not SE. Observe. It is not PRACTI SE. Practice. Practice. Getting it? Sa. There is a difference. SE is not the actual name. Practice means it's a noun. It's a license. It's actually have another meaning called license. You can claim yourself as a chartered accountant. Chartered accountant is different, CA is different, All this that you are thinking that's just an abbreviation. No, CA is a qualification. Chartered accountant is a designation. Section 7 of CA Act, it says the word chartered accountant can be used only by those who are having COP. Getting the point? Generally, that's how the provision was. You cannot use the designation chartered accountant. Suppose you want to name and below you want to use full form chartered accountant. People think you are practicing CA by default. But if you put CA, they don't think that you are a practicing person. They may ask you what you are doing. But if you put a board and claim below chartered accountant, means people naturally think that you are practicing. That fact even CA Institute recognized. So they said the CA cannot use chartered accountant as a designation. Getting it? You can use the designation if you are in practice, no problem. In the name board you can have at home, but it is not permitted if you don't have COP. That's actual intention of the provision is that. Getting it? Beside your name CA you can put. Getting the point? CA caramharsha I can use, whether I am in practice or not. But chartered accountant designation I cannot use. Understood or not? Now, as per CA Act, you can start this license, you can get this license, practice COP, either if you are individually practicing or you are practicing as a partnership firm. See, what is firm? Firm means it may be a sole proprietary firm or a partnership firm. Firm means anything. Getting it? Individual we call him as sole proprietary firm. Partnership is nothing but partnership firm. We'll discuss all this you will get all this at CA final. How to incorporate partnership firm, code of ethics is what. So firm registration number means what. Everything you will be getting at final. Now it is not required. Getting it? Next up. So now for a company, who can be appointed as an auditor? Sole proprietor, individual. He can be appointed as an auditor provided if he is a chartered accountant holding certificate of practice, or a firm. A firm means actually what? Partnership firm or LLP firm where majority partners are practicing in India and qualified. They may be appointed by the company in the name of the firm. By using in the name of the firm I can appoint. The firm itself can be appointed, but the partner of the firm will sign the audit report. The partner of the firm will sign the financials. He is called as engagement partner. Understood or not? All of you. Next. Now this is the qualification. Now okay, a firm is appointed, partnership firm LLP. Who should sign the audit report? Only the partner who are chartered accountants shall sign the audit report. So partners who are chartered accountants shall sign the. All partners will sign or only one partner? One partner is enough. Able to understand. Any one partner the firm should choose, and that partner will sign, and he is called as engagement partner. Getting it? Next. Now there is a question in the institute book in first chapter, I think first or somewhere it will come. Suppose one partner was appointed as an auditor. One partner is the engagement partner. He verified entire audit, but before he signing, he died. Another partner signed the audit report without verifying the working of the previous partner. No. The other partner before he signed, first should review the entire workings performed by previous partner or the other partner. Then get a conclusion whether the other partner has performed all the reasonable necessary evidences obtained or not. Only after that, this fellow will proceed further. Able to understand? For that answer is not given so lengthy. Some 4 or 5 lines only it is given. Next, disqualifications. Who are not disqualified? Who are not eligible to act as an auditor? All of them are CS only. But still we will not appoint. Why? To protect independence. We want the auditor must be independent. So anybody who has relationship with our company, we will not appoint. Who? A body corporate other than LLP. A body corporate is not eligible because Companies Act itself says body corporate is boycotted. Body corporate has a separate legal entity status from members. Now when an auditor and the company, suppose I incorporated a private company. I qualified CA, COP, me and my 3 friends together, totally 5 of us example. All 5 of us became a shareholders in company. We wanted to act as auditor. Our company itself want to act as auditor for another company. Now separate legal entity, limited liability, so many issues were there, no? Can auditor have separate legal entity status? Is audit a technical work? No. It's a work involving personal intelligence. Personally you should be liable, yes or no? You cannot be under the protection of separate legal entity, limited liability. No, auditor should have personal liability in the audit. Getting the point? So body corporates are straight away boycotted. And anyhow, in CA Act, you can't incorporate body corporate. You are only permitted to practice as a individual, or you are permitted to practice as a firm. Then officer of the company is disqualified, employee of the company is disqualified. Officer and employee both are disqualified. Officer means so many were there in the officer position. Yes or no? Like all the directors will come as an officer. All of them, key managerial person, they all come under officer. I am a director in a company. How can I do audit of the same company? I am working as an employee in this company. How can I do audit of the same company? Self-review threat. Next, a person who is a partner or who is in employment of an officer or employee. This is nothing but partner of an employee. What is this? Partner of an employee, partner of an officer, both are disqualified. Same way, employee of an employee, employee of an officer, both are disqualified. Director has some other business. In that you are working as an employee. You cannot act as an auditor for this company. In this company there is an employee. He has some other business. You are acting as an employee there. You cannot do this audit of the same company. Able to understand. So for company officer and employee, their partners, their employees, who are those chartered accountants, disqualified. Clear? All of you. Next. A person who means the CA or his relative or his partner, getting it, holding any security or interest in the company, its a subsidiary, its holding, associate, subsidiary of the holding. Subsidiary of the holding is called as a sister company. Subsidiary of the holding means what? I am having one holding company. This company has another subsidiary. We both are having common parent. Then we are called as siblings, sisters company. Getting it? Not brother companies. Next. So if a person, a person or relative or partner is holding any security or interest in the company, holding company, subsidiary company, associate company, or subsidiary of its holding company, is disqualified. In exam you should write this entire provision. Only then you will get full marks. Yes or no? If auditor is holding shares in the company, is disqualified. That is correct answer, but that is not complete answer. Understood or not? Same way, if the auditor is indebted, by the way, before that, now if you have security or interest, right? Security means what? There are so many equity shares, preference shares, bonds, debentures, mutual funds, derivatives, so many were there. Getting it? Now, your relatives, no. Your relatives can have securities up to 1 lakh rupee face value. How much maximum a relative can have? 1 lakh rupee in the face value. Remember, the 1 lakh rupee exception is applicable only if the relatives are holding securities. If auditor is holding in his name, the exception do not apply. Now, relatives can hold up to 1 lakh rupee face value, right? Where in the company they use the word. Actually, there is no interpretation for that. People wrongly interpret. Even institute book also contains the word. If the shares are held in the same company, best example, Tata Group itself you take. Tata Group is best to understand this. Suppose Tata Motors is looking for auditors. This is the Tata Motors which is actually looking for auditors. It has holding company Tata Sons. This has a subsidiary company Jaguar Land Rover Range Rover. This has associate company some electric motor company. Getting it? This has a sister company TCS. It has sister company Tata Steel, Tata Power, Tata Chemical, Tata Beverages, Tata Salt. These are all various companies. Getting it? Now, so we have covered it, like auditor or relative or partner. Originally, main provision should not have shares in Tata Motors, its holding company, its subsidiary company, associate company, or subsidiaries of the same holding companies, nothing but sister. We should not have shares. Only then we are eligible. Only then we can be appointed as an auditor. However, relative can have securities in the company up to an amount of 1 lakh. That's what they are saying, not exceeding 1 lakh. In the company means only Tata Motors or every group. Logically, everywhere I can have. Altogether one group, altogether maximum 1 lakh. But in the institute book of CA final, they gave a clarification. They gave just a point that relative can hold securities only in the company where you are acting as auditor, but cannot hold in other companies. That's a blender interpretation. Sir, but ICA book gave no. Who prepared ICA book? God, human being only, no? Correct? La? So, just because ICA book is containing some point, that doesn't mean it is always right. Able to understand. You should apply common sense. I am doing audit of a company, in that you are permitting my relative. Why not other group companies? In fact, I am not auditor in Tata Sons, I am not auditor in TCS, I am not auditor in Jaguar Land Rover, I am not auditor for this company. In that company, let my relative have what problem? In my company, where I am acting as auditor, you are permitting relative. Why not others? That's a wrong interpretation, no? In the exception, no. See, every time I cannot give the entire list, no. Every time I cannot give entire list. So exception when they are drafting, they simply used the word the company. They didn't use the entire sentence. Now people are interpreting the company means only the company. Is there any significance for the word THE? Is there any significance for that thing? Above context they used this. So literally relatives can have securities up to 1 lakh rupee face value in all the companies put together. All my relatives together, in all the companies together, maximum face value 1 lakh aggregate. But in exam point of view, you should consider only the company. Yes or no? Because in the suggested answer, what is used? Correct, huh? Yes. Sometimes if it is wrong, we should say it is wrong, but we should follow. Okay, next. So relative can have up to face value 1 lakh. Understood all of you? Next. Suppose indebtedness point. How much indebtedness is permitted? Maximum up to 5 lakh. Now here indebtedness, can auditor also have? Yes. Here you see a person who relative partner indebted to the company or group companies in excess of 5 lakhs. Up to 5 lakhs it is permitted. Main point you see, auditor is straight away prohibited. Exception says relative can hold. Up to 1 lakh. Main provision do not contain 1 lakh security. Auditor cannot hold securities at all. But can I have indebtedness to the company up to 5 lakhs? Yes. Me, my relative, my partner, all of us together to the entire group companies, maximum outstanding indebtedness is how much? 5 lakhs. That's it. Are you getting the point? All of you. Or if auditor has given guarantee or provided security on behalf of third person to this company or group companies. I am using the word group company for convenience. Group means what? Remaining 4 companies. Other than this company, remaining 4. It's holding, it's a subsidiary, it's associate, it's a subsidiary of the holding company. Up to how much it is permitted? 1 lakh. The limit of 1 lakh will apply even for the company not having share capital. If the company is limited by guarantee, see, this guarantee is different, paid up capital guarantee is different. Here guarantee means guarantee given on behalf of third party to the company. A third company, you can sell goods to them. They are trustworthy people. I am giving guarantee. That guarantee is different. Becoming a shareholder by guarantee is different. So this point exception is what? Becoming a shareholder by guarantee. Can you become a shareholder in a company by giving guarantee? At the time you become a member, no. So can you give any company? Can you become a member of any company by giving guarantee? An auditor? No. However, relatives can they become? Yes. Up to how much they can give guarantee by member? 1 lakh. Paid up capital you are permitted to hold up to 1 lakh face value. Same way guarantee also up to how much face value? 1 lakh. Yes or no? Next. Now you see, indebtedness they are saying, right? Indebtedness means what? Suppose company sold me goods in ordinary course of business on credit. Just like any other customer of the company, I also got credit period and I got 6 lakhs worth of goods. Just like any other customer. And company is now asking me to appoint as an auditor. Will I accept or not? No. Even in ordinary course of business, doesn't matter. You are indebted for 5 lakhs or more. Yes, disqualified. Ordinary course, extraordinary course, in normal course, that and all doesn't matter. If auditor is indebted for more than 5 lakhs, disqualify. Correct? Now, can auditor receive audit fees in advance? Entire audit fee can I take in advance? If you take entire audit fee in advance before you start the work, it will again become indebtedness, no? Before you start work, how can you take the fee? Which means you are taking advance. Advance is indebtedness. So take fees only on progressive basis. Finish some percentage of work, take fees. That is permitted. Next. So that's it. Next is about business relationship point. Next one is relating to business relationship point. So this is little bit lengthy. We will take break and then come back. Okay, all of you just go and get back within 15 minutes. So we'll continue with all this business relationship, all that. So the next disqualification is regarding business relationship. Next disqualification is regarding business. Remember, I will not cover each and every point. Briefly, I will revise and proceed. Getting it? So what are they saying? If a person or a firm which has a business relationship with a company or group companies. Now here actually group companies means there is additional one more company added. Subsidiary of associate company. Generally what are the companies? Auditor, the company, or its holding company, or its subsidiary company, or its associate company, or its subsidiary of holding company, subsidiary of associate company is another point added in this. See, for this, no, there is no specific intention behind law. These provisions are drafted by different people at different points of time. So that is the only reason why this kind of inconsistency will be there. Suppose actually if you see the bottom, no, J, there is another disqualification, there is another disqualification. What it says you say. Here you see, if any person directly or indirectly providing prohibited services to the company, its holding company or its subsidiary, only 3 are covered totally. Whereas in business relationship, totally 6 were covered. Whereas securities, indebtedness, guarantee, 5 were covered. No, is there any logic behind this? Means no logic. Are you getting it? These provisions were drafted and added in different points of time by different people. If I ask you who is relative according to you, you will give some 3-4 relationships. If I ask another person who is relative according to him, he will give 7-8 relationships. Correct? Exactly same. So related party means who? Important related party means who? Important person means who? For everybody, it will have different number. Same way, when law is being made, the people who are drafting the law, according to their experience, according to their understanding, they will put that company list. Getting the point? That's it. So, this is a interpretation point. This is not a very big interpretational issue. Now, exception. So, you see how the disqualifications are drafted. You should not be a body corporate. That's okay. That's a legal interpretation issue. So, they removed it. You should not be an officer of the company. You should not be their partner, their employee. You should not have securities in the company. You should not have, indebtedness to the company. You must not have guarantee. You must not have given guarantee to the company. All the ways they are prohibiting. Just to make you independent. Very simple. What are they trying to achieve? auditor and the company should not have any relationship. You should not have business relationship. Business relationship means what? You should not be a distributor, sub-distributor, wholesaler, retailer. Able to understand? Can I be a customer of a company? Can I be a consumer of the goods of the company? For that, no problem. As long as you are purchasing goods at arm's length price in ordinary course of business, no problem. Able to understand? When the problem will come, if you buy goods on credit, that to more than 5 lakhs, then only the problem will come. Indebtedness point will attract. Are you getting it? Otherwise, if you are purchasing on cash basis, using company goods and services for so many years, so much you are using every year, no problem. But if I am buying company goods and services with a view to resell, then it is called as business relationship. Are you getting it? Same way, professional services permitted to be rendered. For the company where I'm acting as an auditor, I can provide some services. I can provide some services to the company as per CA Act. There are some additional services, even though I am auditor, I can provide. But which professionals are, which services permitted but not prohibited? If at all you are providing prohibited services, you are disqualified under J point. Other than prohibited services, are you permitted to render any other service along with audit? Yes. If it is permitted service, even though you are having some relationship with the company, we will not treat it as business relationship. Apart from permitted service, apart from consumer relationship, if you have any reseller relationship with the company, distributor, dealer, authorized dealer, any such kind of relationship, what will happen? You are disqualified. Are you getting the point? Because if you are having a business relationship, you are having interest in the company, self-interest in it again. Next. Not only that, we have seen B point, officer of a company, employee of a company disqualified. Their partner and employee is disqualified. Not only him, relative of a director, relative of a key managerial person are also disqualified. And a person who is in full-time employment disqualified. Actually on this, so much of discussion is there, but revision it is not required. Getting it? Even in exam point of view, not required. Or a person or a firm, a person or a partner of a firm holding appointment of more than 20 company auditors as on the date of proposed appointment. So this is called audit ceiling. What is this called as? Audit ceiling, which means audit ceiling is not to protect independence, but to protect quality of the audit. What is the audit ceiling guidelines? What is the necessity of audit ceiling? Quality of audit. You cannot give permission to a single CA to accept any number of audits. He can audit maximum 20. How many maximum? 20 companies. However, the following companies, any number I can audit. 20 limit do not apply for the following companies. Which companies 20 limit do not apply? 1% dormant small company or a private limited company having paid up capital less than 100 crore provided such private company does not violate 137(92) section. If a private limited company do not violate 137(92) sections under company law provisions, getting it, and having paid up capital less than 100 crore, that kind of private companies, any number of companies I can do audit. Now tell me 20 companies they are saying no. Is it per financial year or per assessment year or what? At any point of time. Today right now I received a call example. Someone is asking me to do audit of a company. I will just look at my list of companies. Right now I am acting as auditor. Right now I am acting as auditor in some company's position. I will look at the list. Total I will see 20. If it is 20, I will not accept this company. If it is less than 20, I will accept the new company which is asking me. Able to understand? Any day whenever you receive a new worker, new client, new company audit, check whether how many companies right now, right then, how many companies are acting as an auditor. That's it. It is not per year, per financial, nothing such. Any point of time, at any point of time, you cannot do more than 20 companies. And while counting the 20, these companies will not be considered. Suppose if it is a partnership firm, the 20 limit applies per partner. It is applicable per partner. Now, in case if a firm is having multiple partners, number of partners multiplied by 20. Which partners you will consider? Only those partners who are CAs, having COP. Suppose I'm a partner in 2 firms. Now on firm A 20, firm B 20. No, all firms together, For my name, from my name, on my name, how many I can accept? Maximum 20. Clear? Suppose if I am doing audit of a private company having paid up capital less than 100 crore but violated 137, violated 92, will this be exempted from ceiling limit? No, that will be counted as part of ceiling limit. Yeah. Next, in CA Act we have 30. In CA Act, what is the ceiling limit? 30, including private companies. Including private companies. Their private companies are not given exemption. Only 1% company, 1% company, dormant company were exempted as per CA Act. You can do maximum 30, excluding 1% dormant company. Remaining all will be counted. Now you have a doubt. Which one we should satisfy, sir? Both. Which one you should satisfy? Both. Suppose I am having 35 private company audits. Company law, as per company law, it is okay, fine. But as per CA Act, it is not permitted. Because I am having more than totally 30 companies. More than 30 companies I'm having, I'm disqualified as per CA Act. Code of Ethics. ICA will take an action against me. Are you getting the point? It's okay. You need not have that knowledge. Later you can learn. I'm just giving you a hint. Next, tax audits. How many you can have? 60. How many you can have? 60 tax audits. So, in computing specified number of audits, whether you are handling singly or combination with another chartered accountants, everything shall be taken. The number of partners of a firm on the date of accepting the new work shall be taken into account. Who are in full-time employment shall not be counted for ceiling limit. Yes or no? If at all a member in practice is exceeding the limit, he is treated as guilty of professional misconduct. We have in ethics schedule 2 clause number schedule 1 part number 1 clause number 9. There is a guideline. If at all you are accepting company audit without satisfying provisions of Companies Act, it is treated as guilty of professional misconduct. You will understand that in CA Finder. Next. A chartered accountant in practice, okay, what they need to do, everyone have to maintain a record of works they are accepting. You need to maintain record of your clients list. That's it. All of you clear? Then we have another disqualification, important disqualification. Prohibited services. What is the disqualification? Prohibited services. I'm not covering every point. Remember, I'm only covering important disqualifications. Major I covered. Now, if a person directly or indirectly rendering any services under 144 to the company, holding company, subsidiary company, you are disqualified. What services if you render, you are disqualified? 144 services. 144 services name is what? Prohibited services. What do you mean by prohibited services? What do you mean by prohibited services? See, these are the prohibited services. They will ask you a straight question on this 4 marks question. What are they? Accounting services. To the same company, you cannot be accountant and auditor. Internal audit you cannot do because you are stat auditor. Why will you do internal audit? Implementation of financial information system. In the company, you are implementing some accounting software. You should not. You are testing some software. You should not. You cannot provide actuarial services if at all you are acting as auditor. You cannot do investment advisory. You cannot do investment banking. Investment advisory. Suppose some stockbroker, which is a company, they appointed you as an auditor and he is asking some investment advices from you. Or you are appointed as an auditor for one big company, listed company. They are asking you to underwrite their IPO. That's called investment banking. Getting it? Outsourced services. Management services. Management services means those services where it involves decision making. Example of management service is independent director. What is it? Independent director is a management service. Able to understand? Next example. Or any other service prohibited. Suppose if at all you are having any of the above services, can you accept the appointment as an auditor? No. Suppose if you withdraw from the above services, can you accept the auditor appointment in that company? Yes. You should not provide these services to which companies? The company where you are proposed as an auditor, it's holding, it's a subsidiary. That's it, correct? Huh? Next, we have now they are saying the word directly or indirectly. What do you mean by directly, indirectly? If I only provide to the company, that's called, in case of auditor is sole proprietor himself, that is direct. True relative, indirect. or through any other person connected or associated with me through any other entity in which I have significant influence or control or whose name trademark is used by me. Getting it? You have to read this 3 and 4 and this point together. Any other person connected or associated with that individual. Associated or connected with me means what? I am a partner in another firm. Can that firm provide that services to the company? No, because the firm is connected with me. The firm is associated with me. Able to understand? Or some entity, example company. The company is providing accounting services to Tata Motors where I am auditor. What is this company? Some management consultancy other services company. In this company, I am the individual has 20% shares. I am the individual has more than 50% shares. Now in a company where I am having influence or control, the company is providing accounting services to Tata Motors where I am acting as auditor. Disqualified. Able to understand. Or the company has a brand name, same brand name we are using, same trade name we are also using for practice. Then also it is said to be providing indirectly. Are you getting it? Similar definition was given for firm. Okay, this you look into. All of you clear? What do you mean by directly, indirectly? They asked as a straight theory question. The past one of the attempt they asked. Think it. Next. Subsequent disqualification point. What is this subsequent disqualification point? We have seen above points. If at all a chartered accountant is coming under any of the above point, we will not appoint him as an auditor. Suppose we appointed. After that disqualification arises. After that disqualification arises. Now what will happen? He shall immediately vacate the office. He shall immediately vacate the office. Yes or no? He shall immediately vacate his office. Office means what? Position. Office means what? Position of auditor. Office means not office chair table. Getting it? So auditor should immediately vacate his office. Nothing but position. But in one of the case alone, in only one case, immediately don't vacate. I am giving you 60 days time to rectify your mistake. Only if it is in this kind of disqualification, 60 days time is given. Suppose you are affected with disqualification in the above list any reason, generally any reason, on which date you are affected with disqualification, same date you have to vacate. You don't have any other option. But if you have one disqualification, no, security held by relative up to 1 lakh is permitted. Suppose my relative acquired securities for more than 1 lakh face value accidentally. How accidentally? Bonus shares. What is it? Bonus shares. Suppose in Tata Motors, my wife is having some 75,000 rupees face value worth of shares. Market value doesn't matter. Market value can be crores. But face value 75,000. Tata Motors declared 1:1 bonus shares. She didn't purchase. Can a shareholder say, I alone don't want bonus share? And company declare every shareholder will be allotted. Company also cannot stop. Yes or no? Her shareholding became 1,50,000 face value because of the bonus shares. Face value increases, no. 1,50,000 face value suddenly. Now just tell me, I told her not to buy the shares because I am the auditor. I took all the precautions. Still, because of the company bonus plan, the shareholding percentage increased. Is there any mistake that I did? In all other cases, if at all something went wrong, I might have not taken sufficient precautions. Correct? Here I told, in spite of it, shareholding increased. Is there any my side mistake or my relative side mistake? That's why, because considering this difficulty, if a shareholding of relative increases more than 1 lakh, please rectify that within 60 days. Sell 50,000 worth of face value, make it less than 1 lakh. Then continue as an auditor. 60 days over, still you didn't rectify. 61st day, you have to vacate. Be able to understand. All of you, the logic. Next. Now, who is relative? In case of HUF, every member of HUF is a relative to each other. Remaining people, in case of other than HUF, husband and wife is a relative. Or father, mother, brother, sister, son, son's wife, daughter, daughter, husband. Getting it? Now here you see daughter, stepdaughter is not there. That kind of observations and all stop. புரியுதா? நம்ம கேட்ட கண்டென்ட் இல்லல தான் இந்த மாதிரி அப்சர்வேஷன்ஸ் எல்லாம் ஹைலைட் பண்ண முடியும். So there is no intention here. Getting it? So all of you clear on ceiling limit, all that? So that's it. Disqualifications is done. So maximum tax audit assignments, how many you can accept? 60 per financial year. That is per financial year, not at any point of time. Whereas company audit 20 at any point of time. Be clear. Next we will have to discuss appointment of auditors. Until now, everyone clear? Next. Getting more clarity? Next. Appointment of auditors. Appointment of auditors. See, the appointment of auditors process involves two things. One is selection of auditor, one is selection of auditors, one is actually appointment process. Now again, selection of auditor is different for government company and selection of auditor is different for non-government company. Here also, selection of auditor is, appointment of auditor is different for government company. Appointment of auditor for non-government company, the process is different. Now, we have only in our we don't have in our syllabus how to select auditor for government company. We don't have how to select auditor for government company. We don't have in the syllabus. We have in syllabus how to select auditor for non-government company, procedure for appointment for government company, procedure for appointment for non-government company. Everything we have in our syllabus. Now here, what is a government company? 4 criteria are there. If any of these 4 criteria are satisfied by a company, it's a government company. Criteria 1, not less than 51% of the voting power held by central government. Or criteria 2, not less than 51% held by state governments, one or more state governments. Criteria 3, a combination of central and state together held minimum 51% of voting power. Or if a government company is a subsidiary of another government, if a company is a subsidiary of another government company, then that company is also government company. Only these 4 criteria. Are you getting the point? Now, many have this confusion. What is private limited company? What is public limited company? What is private sector? What is public sector? So this is where we will have an opportunity to discuss that. See, private limited company means what? The ownership of this company is restricted to private people. My company is not open to public. Anybody going on roadside public cannot come into ownership. Yes or no? You saw my company, you liked it. You want to become owner? No, not possible. It's private. Able to understand? The affairs of the company are private, confidential. Are you getting the point? What is public limited? I'm open to public. My company shares are open to public. My members can sell to anybody. Anybody can buy and become a member. That is public limited. Understood the word public limited means what? Private limited means what? Concept part. Now, next, in this, how many of you have cleared group 1 already? Oh, நிறைய பேர் இருக்காங்க. Fine, it's okay. Now, what is public sector and private sector? Public sector, okay, ITC. What is it? Private sector or public sector? ITC Limited. Public sector. Major ownership is held by government. Yes or no? Tata Consultancy Services Limited. Listed company. Big listed company. Public limited listed company. Public sector or private sector? Private sector. Why in TCS? Less than 50%, more than 50% ownership is held by not government, somebody else, some shareholders. We are all, are we government? No, we are public. If more than 51% of the voting power is held by government directly, central, state, what? Then only it is called as public sector undertaking. Otherwise, it is not public sector. Reliance, all these are public limited companies, but private sector. Private sector, public sector is not company law term. It's an economics term. Understood? In Companies Act, will you find the word private sector? Clear? Understood? That's it. So, government company means naturally public sector. Non-government company, private sector. Now, non-government company can be private limited company, public limited company. This is company law terminology. Understood the difference between public limited company and public sector company? Public sector means government owned. It may be public limited. Public limited company not necessarily government owned. Reliance Industries Limited is a public limited company. Public like you and me can buy shares, no? But is it government owned? So it's private sector. Understood? Private banks we call. Private bank means what? Private limited company. Huh? ICICI Bank is a private bank. But what is ICICI company name full form? ICICI Limited. Where is private word in that? But we are calling it as private bank because it is owned by private people, not government. Now, see how to select the auditor. In case if a company is having audit committee, so what do you mean by audit committee? See, in a company, there are many board of directors. If you look at Reliance Industries Limited, it has many directors. Just a minute. So you take this is Reliance Industries Limited, and in this company, you see there are 14 directors totally. There are how many directors? 14 directors. These are the directors of Reliance company. Getting it? And you see here, so Mukesh Ambani, he is one of the director, chairman and managing director. Neeta Ambani, non-executive director. See again, directors know there are various types. Independent director, non-independent director. Independent director is something like who do not have any interest in the company, who do not have any relationship with the company. He is just a director. Director simpliciter. We call him as. Like how auditor, same independent director. He is appointed based on merit. He is appointed to look at the company, monitor the company, watchdog. Getting it? Now you see, in listed companies or in many big companies, 14 directors were there, right? Now this company, business will be taken care, business has to be looked upon, accounts have to be maintained, audit has to be conducted. There are so many works which CSR activities have to be undertaken, governance activities have to be undertaken, HR policy should be designed, company risk and all has to be, strategic risk management and all they need to check. Strategic management, you might have studied, no, business risk analysis they need to do. Do you think all these 14 directors will do all the activities? No. How the board of directors work? They divide the work between them. So that's why, how do they form? They form committees. How do they form? They form committees. There are 14 directors. Whenever board meeting is held, all 14 will present. But whenever accounts and audit shall be discussed, accounts and audit, some 4 directors are there. 4 of you take care of accounts and audit. 4 of you will take care of how? Form a committee. What committee? Audit committee. Business risk analysis has to be done every day. Some 3 directors were there. 3 of you please form. That is a risk management committee. Company HR policies shall be designed. Human resource policy, salary policy, increment policy, all that. Human resources and nomination and remuneration committee. Some directors together, 3 or 4 of them will form. Company finance completely has to be looked upon. Finance committee. Company CSR project. Some directors have to be looked upon. CSR committee. Overall governance aspects have to be checked upon. Corporate governance committee. Stakeholder relationship committee. Likewise, there are many committees which has to be formed. One example of committee is what? Audit committee. So audit committee will have whom? Board of directors. Will all directors will come in audit committee? No. Few of them will come in part of audit committee. So which companies this committee is mandatory? Now whenever audit committee is there, what will happen? They will exclusively look into audit related aspects. They will exclusively look into financial statements, preparation related things and all. They will guide. Whenever a company has audit committee, those charged with governance means whom? Audit committee. Those charged with whom governance means what? Audit committee, then board of directors. Higher level. Board is ultimate. Audit committee is below board. But audit committee will give recommendations to board. Audit committee will guide the board of directors. Not every director is having knowledge of accounts and audit. But audit committee directors will have that knowledge, because the members of audit committee must have, composition of audit committee. The audit committee will have minimum 3 directors. Majority means 51% shall be independent. The members of audit committee shall be able to read and understand financial statement. They should have financial statements knowledge. Do you think financial statements can be understood by everybody? Going concern means what? Only you and me can understand, because we have that question, because it is important for exams. Will our parents, even though they are educated, do they understand going concern topic if at all they are not from commerce background? Suppose your father or your mother or your relative, some of them is working in a tech company. No idea about commerce, balance sheet, nothing. You go and ask him, hey, this company is preparing financial statements on going concern basis using generally accepted accounting principles. You will not understand anything. Correct? So financial statement is not something that can be understood easily. So audit committee, whoever director is coming part of audit committee, they must be having the knowledge to read financial statements. Now, so that is how company has to constitute audit committee. Now tell me, for whom this is applicable? All listed companies, audit committee is compulsory. Unlisted public companies, any of the 3 criteria if they satisfy, any of the following 3 criteria if they satisfy, audit committee is required. Here actually exceeding 50 crore, they say it is only more. 50 crore is not there, only more than 50 crore. But this kind of mock observation is not required. Getting it? In institute, they will not ask MCQ, is it 50 or more than 50? They will not ask that kind of question. Getting it? Broadly, you remember, that's enough. Next, these limits shall be taken as on last preceding audited balance sheet date. Now, what is the selection of auditor for appointment of auditor? Before appointment, first you should select the auditor. No. Now, what is the procedure for selection? Suppose, if audit committee is constituted, then the auditor shall be selected by audit committee. If audit committee is constituted, then auditor must be selected by audit committee and recommended to board of directors. Board of directors can't appoint. They will recommend it to members. By the way, we are discussing this entire provision from which company point of view? Government point of view, non-government. Government company selection we don't have in syllabus. Government company auditor selection is taken care by C&AG. C&AG has some panel where you and me have to register. We chartered accountants register. If C&AG want government company appointment, they will allocate audit. They will select auditor on suitable basis. So you and me cannot decide that. So C&AG. But for non-government company, auditor will be selected by audit committee. They will recommend to board of directors and board will recommend to members. Members will appoint. Sometimes audit committee will select the board. No. Board of directors may not agree. Then what board of directors will do? Please audit committee change another person. Audit committee decided not to change. No, I will go with the same person. ABC and Co chartered accountants are very good. Board of directors are not okay. Now who will prevail? Whose decision ultimately will prevail? Board of directors. And whenever board of directors disagree with audit committee, they should record the reason. Able to understand. And wherever audit committee and board of directors disagreed with each other, corporate governance issue, it shall be given in annual report. Why board disagreed with the committees and what is the reason? They should give information in the annual report as per SEBI. Generally, board will not disagree. But if at all they disagree, they need to give explanation to all the shareholders why you did not follow audit committee. Audit committee, honest people, independent directors. They will take right decision. Why are you rejecting them? Are you getting the point? People will question. Understood or not? So ultimately they will recommend to members. Members will come and appoint the auditor. And that appointed auditor, his appointment is valid up to 6th AGM conclusion. This is a broad process. This is what we clearly mentioned. Board may agree with the proposed auditor. If board disagrees with the recommendation, refer to audit committee for revision. Audit committee decided not to change. Then board can recommend to auditor, proposed auditor, and the fact that they disagree with the committee selection and reasons, members may take final action. Easy. Next. So what is the appointment procedure? What is the provisions related to appointment? Now here, again, I told you appointment process is different for government company and non-government company. Again, for government company itself, we have how to appoint first auditor, how to appoint subsequent auditor. Non-government company also we have how to appoint first auditor, how to appoint subsequent auditor. Who is a first auditor? If the auditor is appointed for the first year of its incorporation, we call him as first auditor. Nothing but if the auditor is appointed for conducting audit of first financial year, we call him as first auditor. Any other auditor is subsequent auditor. Getting it? You know, company financial year. No, there is a definition for financial year. If company financial year shall end on 31st March, shall gap, the maximum duration of financial year is what? 15 months. Maximum financial year can have how many months? 15. Only in the first year 15 months is possible. Getting it? Suppose if a company is incorporated between January 1st and 31st March, only between this, if company is incorporated on or after 1st January up to 31st March, only within these 90 days or 91 days, whatever, if a company got incorporated, it can have more than 12 months financial year. If a company incorporated on January, generally closing should be done by 31st March. But immediate 31st March I will not do. I will go beyond 31st March. Are you getting the point? I will go beyond 31st March. One of the students have told me indirectly, a company cannot have less than 3 months financial year. That interpretation is wrong because that is not a condition. Able to understand? Simple. If a company incorporated in January 1st, by 31st March instead of closing, I will close on the next 31st March. Suppose I incorporated on 1st January 2022. I will close my books of accounts on 2023. What is the gap? 15 months. Suppose I incorporated on 1st March 2022. I will close on 31st March 2024. The gap is more than 15 months. So not permitted. So 2023. Gap is less than 15 months? Yes. Accepted. Suppose I am incorporating company on 1st December 2021. Let me check up to 31st March 2023. Gap is again more than 15 months. Not permitted. But I should close on 31st March only. So which year I should come? 4 months. It is permitted. Okay. Less than 15. It can be 15 or less than 15. And should close by 31st March. So this is first year. So in some exceptional cases, first year can be more than 12 months, but not exceeding 15 months. Only first year. Second year onwards, April onwards, it will start again close on 31st March. All other years will be only 12 months. Very clear. Next. So if auditor is appointed for the first year of incorporation, we call him as first auditor. Remaining are called as subsequent auditors. Now, in case of government company, first we will discuss provisions for government company. So what is the procedure for appointment of auditor in case of government company? The first auditor will be appointed by whom? Selection will be by C&AG. Appointment will also be C&AG within 60 days from the date of registration. Many students fail to write the word from the date of registration. Complete answer. If C&AG fails to appoint, board of directors will appoint within next 30 days. If board also fails to appoint, inform the members who will appoint within 60 days at EGM. This point many people will not write. And not only this, whoever is appointed, his appointment is valid up to conclusion of next AGM. Conclusion what many people will miss. Until next AGM, until conclusion of next AGM. What's the difference? Suppose I planned the AGM on 10th August. But on that day, quorum was not formed. Or quorum was formed, some additional discussion came. AGM was adjourned to 17th August. Now AGM finally concluded when 17th August. Now if I say appointment is valid up to until next AGM means what? 10th August. Conclusion of next AGM means what? 17th August. What is the provision? Conclusion of first AGM. So the auditor appointment, auditor shall hold office till conclusion of first AGM. Able to understand. So whenever a question has been asked on this practical question, you should write fully like this provision. Now, what about subsequent auditor of government company? Appointment of subsequent auditor for government company. The C&AG only shall appoint within 180 days from the date of commencement of the financial year, and his appointment is valid till the conclusion of next AGM. Conclusion of next AGM. Are you getting it? For non-government company, we will check with the dates. Getting it? Now, what is the appointment procedure for non-government company? First auditor. First auditor of non-government company, who will appoint? Board of Directors will appoint. First auditor of non-government company shall be appointed by Board of Directors within 30 days from the date of incorporation. If they fail to appoint, inform the members. Members shall appoint the auditor within 90 days at EGM. 90 days will be calculated from date of registration. 90 days is calculated from date of registration. If board fails within 30 days, next 60 days members will appoint. But instead of defining next 60, what they said? Just within 90 they said. Now 90 means what? From which date? Incorporation date. Are you getting it? But don't write 60 days word. Write only 90 from incorporation. Don't even mention from incorporation. Just you understand that. You just simply write within 90 days. That's it. Are you clear? And the auditor will hold office till conclusion of first AGM. Clear? Now, we'll take an example here. Suppose a company XYZ Limited was incorporated on 10th April 2020. This is the year when the company was incorporated. So first year is what actually? What is the first year? 10th April 2022, 31st March 2020. Okay, sorry, 2021. Now within 30 days means by 10th May we should appoint the auditor. Let us assume Board of Directors has appointed on 5th May. Board of Directors have appointed on 5th May Mr. A as the auditor. Now Mr. A appointment is valid up to conclusion of first AGM. Company year is over on 31st March 2021. First AGM will be conducted within 9 months, no? But company decided to conduct within June itself. They didn't wait up to 6 months also, within 3 months itself. Every time the company will conduct AGM in June month only. Let us assume 15th June 2021 is first AGM for the company. First AGM for the company. No adjournment, nothing. Same day, everything concluded. Mr. A appointment is valid up to 15th June. Now, Mr. A is reappointed. Mr. A is reappointed for how many years? Subsequent auditor. Mr. A is appointed on the same day again. Mr. A is appointed. Mr. A is appointed on the same day again. Now his appointment is valid up to 6th AGM. Conclusion of 6th AGM, which means this is year 1, this you don't count. So here he is appointed. Now first he will do audit of which year? Or let us assume Mr. B is appointed. Mr. B is appointed as subsequent auditor in the first AGM, whose appointment is valid up to 6th AGM from the conclusion of first AGM. Now Mr. B will do audit of which year first? 1st April 21, 31st March 22. So 21-22 he will do audit. 2021 last year auditor did. He audited. What about 21-22? Who will do audit? B will do. That year will over on 31st March 22. AGM is conducted 15th June 2022. Will he leave the company? No. Again he will do audit of 22-23. The AGM is conducted on 15th June 2023. Again he will do audit of 23-24. Then AGM will be completed on 15th June 2024. Same date company is conducting AGM. Let us assume. Sir, what if it is Sunday? Don't ask. Okay. Just for the sake of example. Next. 24-25. Same 15th June 2025. Again 25-26. 31st March 2026. Books of accounts closed. And audit is done in the 2026 AGM. Completely everything is done. Now he will leave. Now you see, this is the 6th AGM. From the AGM where he was appointed. Suppose if I call this as 1, 2, 3, 4, 5, 6. Suppose if the auditor is appointed in 40th AGM. His appointment is valid up to conclusion of 45th AGM. If auditor is appointed in the conclusion of 45th AGM, his appointment is valid up to conclusion of 50th AGM. Likewise, it will come. Able to understand, all of you. Correct? So, now you see, for how many years he is doing audit totally? How many financial years? 5 financial years he is doing audit. Able to understand? Now, we will say no, auditor is appointed for 5 years. Not correct. Auditor is appointed for conducting audit of 5 financial years. That is correct sentence. Suppose no, first AGM is conducted in 15th June, whereas 6th AGM was conducted in September. Gap is more than 5 years. But 6 AGMs only. But gap is more than 5 years. Our first AGM was conducted in September. 5th AGM was conducted in June 6th. The gap is less than 5 years. So auditor may be appointed for a duration of more than 5 years or less than 5 years. But he will do audit of. That's it. Understood. Conceptually you should understand all this. Next. Next. So everyone clear all of this, all of you. So that's it. So that is regarding subsequent auditor provision. Every company shall at AGM appoint an individual or a firm, and appointed auditor shall hold office from the conclusion of that meeting till the conclusion of 6th AGM, and thereafter till the conclusion of every 6th AGM. Now this question has been asked. What are the certificates the company shall obtain from the proposed auditor or proposed cost auditor or proposed secretary, anybody? What are the certificates the company shall obtain from proposed cost auditor? They may ask you like this. Cost auditor also has same disqualifications. Before appointment is made, first get the consent. First of all, is he interested or not? Ask him. Don't give him a surprise that he was appointed. Correct? Next, a certificate indicating he is eligible and not disqualified. You should get a certificate that he should give a self-declaration that I am eligible to become auditor of the company. I met with qualification. I don't have any disqualification. And he should once again give declaration. Total number of audits after accepting this client also will be within ceiling limit. And I should give him list of pending cases against me or my partner or the firm indicated in proper manner. I should give all these declarations to the company. Only then company board of directors recommend to members. Then members will appoint. Yes or no? Once auditor is appointed by the company shall file a form with ROC within 15 days. The form number is ADT1. Mostly they will not ask this form number. Some senior citizens, whoever is setting paper, they will ask. Getting it? வீட்டை உக்கார மாட்ட சும்மா எக்ஸாம் பேப்பர் செட்டரா வந்துட்டு இந்த மாதிரி மொக்க கொஸ்டின் எல்லாம் கேள்வி கேட்பா. எஸ் ஆர் நோ? இது 30 டேஸா 60 டேஸா என்ன ஆச்சுன்னா என்ன ஆயிடும் உனக்கு எனக்கு? You should ask the concept. Yes or no? You should test the concept, analytical skills of the student. Next. Everyone clear? Where at any AGM, if no auditor is appointed or reappointed, existing will continue to be auditor. This provision is copy pasted from previous Companies Act to this Companies Act. Now in this Companies Act, no relevance for this. Getting the point? Earlier, no, before this 2013 Companies Act, we used to have appointment every year. Only after 2013 Companies Act, 5 years at a time appointment concept came. Now 5 years appointment concept at a time, we will not apply this provision. But still some super senior citizens setting the paper are questioning this. Because they don't know Companies Act 2013, they would have not read. They read only 1956, they're still in that only. Next. So all of you clear? Everyone? Next. Provisions of filing casual vacancy. So how to fill casual vacancy of the auditor? So what is that vacancy? Casual vacancy. What is meant by the word casual? They just used casually. Promise. They just used the word casually. There is no significance for the word casual. See, when will I say casual vacancy? If at all uncasual vacancy is there, then it's a casual vacancy would have some significance. Is there any uncasual vacancy provision in the law? No. Simple. In auditor's office, no position, no. If auditor is not there in the position, he is disqualified because of some reason. Then there is a space, no, there is an empty, no, in the position. Who is auditor? So that vacancy is called as casual vacancy. Are you getting it? Now casual vacancy shall be filled. Yes or no? So how to fill the casual vacancy? First of all, what do you mean by casual vacancy? First of all, what do you mean by casual vacancy? In this example, the auditor was appointed on 15th June 2021. Yes or no? First AGM. And his appointment is valid up to 15th June 2026, which is 6th AGM conclusion. I am talking about non-government company. Example. Now, this is the date of appointment. This is the expiry of term. What is it called as? Expiry of the term. This is called term of appointment or tenure. So, once the term is over, then the term is expired. What you have to do on the expiry? You have to leave the company. But before expiry of the term. You left the company. The auditor left the company before expiry of term. Why he will leave the company before expiry of the term? There are many reasons. Yes or no? The auditor might have died, demise of the auditor. Or if it is a partnership form, dissolution might have happened. Or the auditor may become incompetent to contract. The auditor may have become incompetent to contract as per contract law. Or auditor might have been disqualified subsequently after the appointment. Subsequent disqualification immediately shall vacate, and that vacancy shall be treated as casual vacancy. Or auditor was removed by the company only removed, or tribunal removed. Either company or NCLT, someone have removed. Or auditor poita resignation. Auditor himself resigned. Any reason. By reason of by any reason, if the position of the auditor became empty, that vacancy is called as what? Casual vacancy. Remember, there is a definition for casual vacancy. Vacancy arising in auditor's office by any reason other than expiry of term. Other than expiry of term, if vacancy comes, that's a casual vacancy. Term expired, he left. That is not casual vacancy. 6 days, he will leave company. Is it vacancy? No, that is not casual vacancy. Before expiry of term, vacancy if arises, it's called as casual vacancy. Now, how to fill the casual vacancy is the question. Can I just leave like that, or should we fill the auditor? That is the question. We must fill the auditor. Casual vacancy in case of non-government company, what is the procedure? In case of government company, what is the procedure? This is the question. Now, in case of government company, casual vacancy shall be filled by whom? C&AG within 30 days. Hey, auditor left the company, man. Audit was not conducted. Books of accounts have to be prepared. Books are prepared. Auditor has to conduct the audit. Audit report should be given. We should send to all the shareholders. We should call for the general meeting. All this, if it should happen, audit must be done. And the auditor left. So we cannot continue like this without auditor. Can we conduct AGM without having financial statements? You might have seen in 137. Yes or no? So C&AG will appoint within 30 days. If C&AG do not fill, board of directors will fill within next 30 days. Now, what if it is a government company? What is the risk? Why auditor vacancy is there? Check it out. Auditor died, or dissolution in case of partnership firm, or incompetence to contract, or subsequently disqualified, or he was removed by the company. Any reason other than resignation. Vacancy arises not because of resignation. We only removed him. Board of directors can fill within next 30 days another chartered accountant. Suppose if it is resignation, the appointment shall be approved by company at the general meeting. Which general meeting? EGM, which will be convened within 3 months of the recommendation of the board. Board will recommend the auditor. They will not appoint. They don't have power to appoint here. They will recommend the auditor. Within 3 months, meeting will be conducted. Their auditor will be appointed. Are you getting the point? All of you. Sir, within 3 months, AGM only coming, sir. Can I directly appoint in AGM? If you want to conduct AGM, first books of accounts, financials, everything must be audited. No. Audit report must be there. No. Then only you can conduct AGM. Correct? Huh? In order to call AGM, you must send 21 days notice. Along with notice, what will you send? Financial statements and audit report. So, auditor resigned, financial statements not ready, financial statements were not audited. How can you call for AGM? At a time, how can you mix these two? So first call AGM, appoint auditor. He will do audit. Then again call AGM. He will explain to all the shareholders all the things. Clear? Now we are appointing auditor. No. Government company, anyhow it is appointment is valid up to next AGM conclusion. Non-government company 5 years. No. In casual vacancy also 5 years it will come. No. In casual vacancy if you are appointed, always your appointment will be until conclusion of next AGM only. Original auditor was appointed for 5 years. You are not appointed for 5 years. You are appointed temporarily. In AGM, people will decide. In AGM, people will decide. Able to understand. That's it. So what is casual vacancy meaning is also explained. Next. Now, auditor can resign, no? How he should resign? That is a question. How he should resign? Can he resign or not is debatable question. That you will understand in final. How to resign, all that. If at all you want to resign, what procedure you should follow? That is given under Companies Act. First, if you want to resign, inform the same to C&AG in case of government company. More importantly, first inform to the company. Yes or no? And you need to file a form with ROC in ADT3 within 30 days from the date of resignation. In auditing chapter, you will get totally 4 forms: ADT1, ADT2, ADT3 and 4. 1 and 2 filed by company. ADT3 and 4 filed by auditor. ADT3 resignation. ADT4 reporting of fraud. ADT1 appointment of auditor by the company, means company did the appointment, so they need to inform. Company want to remove the auditor, say they did removed, so they need to file. Resignation, who did? Auditor, so he has to file. Fraud, who should report? Auditor, so who should file? Auditor. That's why 1 and 2 by company, 3 and 4 by auditor. Understood? Next. Now, whatever the reason form you are filing, no, should you mention reason or not? Clearly. Whatever, anything is fine. Any reason you can mention. So, the auditor should mention the reasons and other facts that may be relevant regarding resignation. Suppose if you fail to comply with this, if you fail to comply with the above terms and conditions, you are liable for punishment under 140 subsection 3. What is the punishment? 140 subsection 3 says, if you fail to inform the company, if you fail to inform the C&AG, if you fail to mention the reason for resignation, if you fail to file ADT3 form with the ROC, any failure, you are liable for penalty. Penalty is having 3 parts: fixed penalty, variable penalty. In the law, you don't find these words. For understanding purpose, I am using. What is a fixed penalty? Auditor is liable for a penalty. What is the provision? In case if the auditor failed to comply with 140 subsection 2, he is liable for a penalty of 50,000 rupees or auditor's remuneration, whichever is lower, and for continuing failure, 500 rupees per day, subject to overall maximum of 2 lakhs. This is a question. This is a statement. Now, fixed penalty is how much? 50,000 rupees or remuneration, whichever is lower. And variable penalty is what? 500 rupees per day for continuing failure from the date of first failure. Now, when the first failure will start? After 30 days. After 30 days. Within 30 days, you have to inform. Up to 30th day, is there any failure on your part? After 30 days also, you didn't inform them. 31st day onwards, your failing start? No. So, every day is a failure? No. You are failing with the provision. So, for every day after 30 days, 500 rupees per day penalty we have to calculate. Now, as a whole, what is the maximum limit? 2 lakhs. That's it. Easy or not? Next. Now, then we still have removal of auditor. So, next. Removal of auditor. Now, removal of auditor is again having 2 provisions. Removal of auditor by company, removal of auditor by NCLT. Removal of auditor by company, removal of auditor by NCLT. Now, what is the procedure? If company board of directors want to remove, first board resolution is required. Then you must obtain central government approval within next 30 days. Getting it? Central government gave approval. You filed a form ADT2 to central government and got approval. After getting approval, within next 60 days, conduct an extraordinary general meeting. Inform the members what happened clearly. Pass special resolution. 3/4 majority is compulsory. Only if central government gave approval, only after passing special resolution, auditor will be removed. Otherwise, he will not be removed. Now, before you do this entire process, if you want to remove the auditor, first you should communicate him, no. Opportunity of being heard should be given, no. So, before removing the auditor, an opportunity of being heard shall be given. Now, Here you see the provision. The rotation I'll come back later, okay? So provisions related to removal of auditor. Getting it? So an opportunity of being heard shall be given to the auditor before removing him. Actually, in my main material, I think we have added a question. Why central government approval is required for removing an auditor before expiry of term? Actually, removal means what? Is it after expiry of term or before expiry of term? Logically, common sense, before. Term expired, he will only live. Why you have to remove? After 6 months, you will only live. Why should I suspend you? Correct? So, before expiry of the term only, removal, permission, prior government, prior approval of the government, everything is required. Otherwise, not required. Correct? So, in the main material, I have a question, additional question. Why central government approval is required? Why central government approval is required? If auditor shall be removed before expiry of term. Suppose if auditor want to be removed after expiry of term, that is not removal, first of all. That is not removal. Auditor will naturally change. Able to understand. Now you have a provision here. 140 subsection 4. There is a provision. How to appoint an auditor other than retiring auditor. How to appoint an auditor other than retiring auditor. Special notice. Have you seen all that? So many will read that provision without understanding it. I will give you the logic here. Okay. So understood until now? Next. Removal of auditor by NCLT. When NCLT will remove the auditor? When NCLT will remove the auditor? If NCLT received an application from either tribunal on its own or central government or some aggrieved party. What application? Application is received that auditor of a company has acted in fraudulent manner, colluded with the directors and officers and cheated public. Then tribunal will direct the company to change auditor. Then that means casual vacancy arisen. Company will appoint another auditor. Government company, C&AG will appoint. Suppose if the application is made by central government. Central government means what? Income tax department, GST department, somebody. Okay, and tribunal satisfied that change is required. Then it shall make an order that he will not function as auditor within 15 days of receiving the application from central government, and central government may appoint another auditor in his place. Understood or not? Further, the auditor on whom this prohibition order was made, the auditor in respect of whom the prohibition order was passed, he will not be liable to become an auditor for another 5 years. The firm itself is disqualified for 5 years for all other companies. The firm against whom this disqualification notice was given, it is disqualified, for 5 years to do statutory audit for any company. Not only the company where you are removed. In every other company also you are disqualified for next 5 years. But this CFO can do non-audit services. Audit services they can't do. Able to understand. That's it. So that is regarding removal of auditors by tribunal. Next we have rotation of auditors. Getting it? Actually we have a spelling mistake here. So rotation of auditor. It's okay. If at all you have that any small mistake, you can take it out. Now, rotation is applicable for these companies. I'm not talking about the rotation, applicability points. What is the manner of rotation? Why rotation of auditors concept came? To eliminate familiarity threat. If you are having continuous association with company for so many years, if you are continuing as an auditor for so many years, will you develop some bonding or not? Auditors and directors develop some bonding. Maybe you don't have any relationship with the company, business relation, you don't have shares, but your independence of mind will affect, no? Naturally, you develop some sympathy towards the client. They will develop some sympathy, some bonding will be developed. Now you are becoming more familiar. Mind is compromised now. Able to understand? So, compulsorily auditor has to be changed. By the way, this provision is applicable for which companies? Non-government companies. For government company, C&AG will take care. We are discussing rotation provision only for non-government company. Now, what is the rotation provision says? If at all a company appointed individual as an auditor, for how many years an individual can be appointed continuously? One term of 5 years. Not even 5 years, they say 5 consecutive years. Now, an individual completed one term. First, 39th AGM appointed, up to 44th AGM conclusion, this fellow is there. Can we reappoint him one more term? No. Can I reappoint one more term? No. Because he is an individual. For how many years we should block him? From expiry of the term till next 5 years, I should not appoint him. Correct? Suppose if it is a partnership firm, my auditor. Can I appoint at a time 10 years? No. I will appoint for one term of 5 consecutive years. Can I immediately reappoint for another term of 5 years? Yes. Another term we appointed. After 11th AGM, can we appoint again one more term of 5 years? No. How many years we should block them? 1. Getting it? Now, in my entire lifetime, with 2 auditors, can I manage? Happily, I can manage. 10 years, one firm appointed. 5 years, another auditor. Again, 10 years, I brought back the firm. Again, 5 years, this fellow will come back. With the 2 persons, with the 2 individuals, or with the 2 firms, I can easily manipulate. No. Able to understand. All of you. Now, you see the word here, they use the word firm of auditors. Firm of auditors means sole proprietor of partnership firm. Act do not contain anything clearly, but ICI gave a notification saying it is, MCA gave a notification saying it is a partnership firm and LLP. Not sole proprietary firm. Sole proprietary firm is also firm only. Able to understand. Now, when you are rotating, getting it, what points you should take care. You should take care. Like we will call, if an auditor who is appointed in 39th AGM, he will be retiring in 44th AGM. He is retiring. Can I reappoint him? Means I will check, is he eligible or not. If the company rotation is applicable, this is individual not eligible for reappointment. If not eligible for reappointment, retiring auditor will be reappointed or not. Not reappointed means he will leave the company. Then he is called as outgoing auditor. Now in his place another auditor is coming. No, we call him as incoming auditor. Now incoming audit firm, outgoing audit firm, common partner should not be there. If at all there is a common partner, the new firm is also blocked for 5 years. Outgoing auditor, incoming auditor shall not belong to same network, Airtel Jio, not that. Getting it? There are network firms in India, okay, like Deloitte, KPMG, ENY, BDO, PwC. There are so many network firms in India. Grant Thornton, getting it? So GT. So there are so many network firms that are there in India. Now, network means what? It's a brand name. The actual firm is different. ABC & Co is a Deloitte firm. DEF & Co is also Deloitte firm. DHI & Co is also Deloitte firm. ABC & Co completed 10 years in one company, 2 terms. Now, can I appoint DEF & Co, which is also Deloitte network related firm? No. Network itself should change. Sir, what is network? How to form this network? All that you have in CA final ethics chapter. Now, it is not required. Understood or not? Not only that, a person who is a partner in charge of the firm certifies the financial statements of the company, retire from the company and join another firm. The another firm is also disqualified for 5 years. Suppose last 10 years ABC & Co is our auditor. In that, Mr. A is signing our balance sheet P&L. Our company balance sheet P&L. Now that firm 10 years completed, left. Mr. A withdrawn from the firm, resigned from the firm also. Came out, retirement of the partner. Joined with another firm. Is it a common partner? No. He is not a common partner. He removed, no. In one partnership he came out. So common partner point cannot be applied. Now he joined another new firm, right? Can I appoint that as an auditor? Then also not appoint. No, you should not appoint. Now here people are making all wrong interpretations. Sir, Mr. A signed the financials and he resigned. He went to another firm. Then the firm is disqualified. Suppose ABC & Co, sir, 10 years they did audit. Mr. A is only signing our financials. But Mr. A did not come out. Mr. B came out and joined another firm. What about that? Still disqualified. Understand the intention of the law. Here, provisions, rotation principles are inclusive or exhaustive. Principles must be understood as inclusive. Understand the intention of the principle. Accordingly, if at all there is a resemblance of the partners, don't accept that audit. Don't accept them as an auditor. Clear? They only speak about 3 criteria, but doesn't mean only 3 you need to look into. Understand the logic behind that and accordingly fulfill it. Leo. Next. You know, there is a question on this. The concept of joint audit. There is a correct or incorrect question on this. The Companies Act has some traces about joint audit, or the Companies Act do not contain any traces for joint audit. Correct or incorrect question? Incorrect. Actually, in Companies Act, there is nowhere joint audit word is covered. Only in one provision it was covered. That too in the rotation of auditors. Here it is covered. Here it is covered. What they will say here? You see here, subject to the provisions of the Act, members may resolve that. What are they saying? Members may resolve that. In the firm appointed by it, auditing partner, nothing but engagement partner and team shall be rotated at such interval. What they can say, okay, audit firm is appointed for 5 years. Sir, 5 years, same person don't come and do audit. Every year change. For better purpose. Members of the company may take that kind of decision also. Now, is it a normal rotation? Is it rotation? Is it change of auditor? Rotation of auditors means what, man? Change of the firm or change of partner? Firm. Here they are talking about what? Change of partner. That's why I call it as internal rotation. This is not firm changing, auditor changing. Just, sir, every year same partner. Why same partner every year? Every year let them come different partner. Is it compulsory, by the way? No. Members, if they resolve, then they have to follow. Or members may resolve. Audit will be conducted by more than one auditor. Members, if they decided, joint auditors can be appointed. Now tell me, Companies Act 139 subsection 2 indirectly speaks about joint auditors, no? So, do Companies Act contain any reference to joint audit? Yes. Then I say, Companies Act is not at all speaking about joint audit? No. Are you clear? All of you. Just a minute, I will show you the question, how it will come. You see, I have given many questions, practical questions also. Okay, in the main book. I told, right, this is only a concept notes. Here we have given practical questions, how to present in the answer, everything is highlighted. So here the audit, true or false statements. In my main book at the end of the chapter, true or false statement is covered. You see, 19th question, you see true or false statement in my main book. The concept of joint audit has legal foothold under Companies Act 2013. Correct or incorrect statement? Correct. Under section 139, you can write 139 if you don't remember subsection. The members of company may resolve that audit shall be conducted by more than one auditor. Hence, the concept of joint audit has legal foothold. Legally, in Companies Act, identity is there. Companies Act is silent, generally joint audit, but indirectly through rotation, this point is indirectly covered, joint audit concept. That's it. With this, rotation is also completed. With this, rotation of auditors is also completed. Just one more provision I have. Before expiry of term, everything we finished. No, powers of auditor, all that I'll discuss later. Along with audit report, I'll cover. Powers, duties, all that. Reporting of fraud also I'll cover only with audit report. Audit of branch office accounts, applicability of provisions, appointment of auditor of all this I'll cover later. Provisions related to cost records, that also I'll cover later. So, what is the procedure for appointment of auditor other than retiring auditor? Generally, no. Suppose retiring auditor means what? Suppose we appointed auditor at 39th AGM. His appointment is valid up to 44th AGM. Suppose company directors, they decided, okay, let us change auditors. Until 44th AGM, he will continue. Before that, they'll have board meeting. Audit committee will say another auditor name. They will approve. They will send AGM notice that in the 44th AGM, another auditor will be appointed up to 49th AGM. Notice has been sent. Members came. New auditor was appointed. Correct? How appointment of new auditor will happen? Suppose I have right now Mr. A. 44th AGM, until that his appointment is valid. Now 44th AGM onwards, I want to appoint Mr. B. What is the process I will follow? Company board of directors will form a resolution. What resolution? 44th AGM onwards, Mr. B will be our auditor. Now AGM notice they will send to the members. In the notice they will mention Mr. B will be our upcoming auditor from 44th AGM to 49th AGM. Shareholders will come, approve it, over. Correct? Where is special notice in this? Where is special notice? Here they are saying no, special notice shall be required. Have you read this provision? All of you, how many of you have read this provision? 140 subsection 4. It says special notice. Suppose, look at this situation. Suppose appointed auditor, Mr. A, in 39th AGM. Up to 44th AGM, his appointment is valid. Company decided, directors, they decided Mr. A is working very well. Let us appoint same auditor from 44 to 49. Forget about rotation, all that for the timing. The company rotation does not apply. Okay, fine. So 44 to 49 also same auditor. Now company sent me notice. Hey, come for AGM. In that notice I saw same auditor is going to be reappointed. I am a key shareholder. Who am I? Key shareholder having 1% voting power in the company. Getting it? I thought auditor will be changed. Because previously Mr. A is our auditor, right? Up to 44th AGM, he is having so many cases pending against him. Right now he is an auditor for one company which is in insolvency. He is facing so many cases against. If the same person is our company auditor, I am worried. But anyhow, appointment was made. 44th AGM, he will leave. Directors will only change voluntarily, I thought. Directors only will voluntarily change. So I can happily come and approve new auditor. But when I saw the notice, I shocked. What the notice says? Mr. A is proposed to be reappointed. Along with me, every shareholder have received. What will happen if I don't react? Everybody will come, approve and leave happily. But I am a key shareholder. I don't want this to happen. What can I do? I will give special notice to the company 14 days before the AGM. Because they sent me notice 21 days before. And I saw within 7 days I should react. So I should send notice to company. Within 14 days, before 14 days before the AGM, I will send a notice, special notice. I am objecting Mr. A's reappointment. The following are the reasons. Please circulate my special notice to every other shareholder. Company circulated to every other shareholder. Until now, how many companies circulated? 2 documents. First document, director's intention to reappoint. Second document, one of the shareholders' objection on reappointment. Now auditor also, he will also receive special notice. Auditor said, hey, on me, what are these objections? I will give reply on this. Auditor gave written representation to the company at least 7 days before meeting. Company shall distribute this written representation to all other shareholders, including me, who sent the notice. Now everybody got 3 documents. Original notice, where Mr. A is being reappointed as proposed by directors. Special notice objecting Mr. A reappointment. Mr. A reply on the objection. Now shareholders will come. They have all the 3 documents, entire information. They will take the final call. Suppose shareholders believed special notice. What will happen? Will they reappoint the auditor? No. Now tell me, other than retiring auditor, we will appoint obviously another auditor. So in this situation only special notice is required. Otherwise, suppose if company itself decided to change to Mr. B, will I issue special notice? Company itself sent a new auditor name. Should I issue notice saying don't appoint existing auditor? Yeah, that's what now we mentioned in the notice. Able to understand. That's it. So that's the power. Have you read special notice provisions in company's law? Company law. Have you? That's it. So with this 140 subsection 4 is also completed. Suppose no, for the company rotation is applicable. 5 years individual completed. Should you give special notice telling the company don't appoint once? Already we don't appoint. Law will not permit, first of all. You need not tell. So that's what the last note point. This provision need not be applied where retiring auditor completed tenure of 5 years as per 139 means if rotation of auditors provision is applicable, already tenure completed, company has to change. Even if company reappointed, board of directors are liable for punishment. Understood or not? That's it. Major provisions of company audit chapter are discussed. Remaining provisions of company audit we will have to discuss after audit report. So next chapter will start audit report. Comfortable? Easy? That's it. Okay. So we'll start tomorrow the audit report chapter. We'll continue in the next session. Okay. Thank you. So with this 143 is completed. Then we still have in company audit few more provisions like branch audit, cost audit, and we have rights and duties of an auditor. Rights and duties of an auditor. Then we have 147 penalty. And we have internal audit provisions, nothing but. Getting it? These provisions I have not covered. Branch audit, cost audit I will cover in brief. Remaining you just take care. They're very easy. Okay. So we'll move to company audit again. You see, whatever book that you are following, I don't know. See the quantum of syllabus. See the quantum of syllabus. So much is there. So there are some provisions like rights and duties of the auditor, powers of the auditor. Auditor has right to access to books. They'll ask you a question on write about auditor's power to access to books. 4 marks. You have to write all these points. Okay. The right of access is to all the books and records, whether maintained at head office or branches or anywhere. The right can be exercised anytime. That is business hours, working days. And with respect to subsidiary associate company also you can access if at all you are doing audit of consolidated financials. And remember, books and records includes minutes of board meetings, other records includes all this. And books of accounts definition includes cost records. Even the cost auditor is separately appointed, you still have access to cost records. Moreover, you have to give your opinion on cost records maintenance in CARO. Under the 6th clause of the CARO, you have to talk about whether company is maintaining proper cost records or not. Next, you have right to get information and explanation when you did not understand something in the books. You have right to ask anybody information explanation. They have to explain. And you have right to receive notices of every general meeting. And you have duty to attend every general meeting. But with prior approval of board, you can skip any general meeting. Right to lien. This actually we don't exercise, but in one of the November 2019 exam, I think somewhere it has been asked. Write about right to lien. If auditor did not receive the fees in respect of the audit performed on the company books of accounts, you can exercise a lien only on those books where you audited. Can you exercise lien on the director's personal records? You can't. Lien must be exercised only on those items where you have worked on but amount is not received. Getting it? But at the end of the para, what it says is simply, due to condition under 128, it is impracticable for the auditor to exercise lien. And moreover, in reality also, it is not at all useful. Where you will keep all the records? In auditor offices and all will be very smaller. Where you will keep line records? Getting the point? Now, by the way, can auditor exercise lien on working papers of him? Working papers means I am doing work, that is my data. My working is my data. See, now suppose I am writing so much, no, here. Can I exercise lien on this? This is what I worked, yes or no? On my property, how will I exercise lien? Able to understand? Lien can be exercised on others' property legally. Correct? Huh? Then auditor has duty to give an audit report. What is that audit report we have learned? Yes or no? What points that he should cover in audit report is mentioned here. And if auditor gives any qualification remarks, he shall compulsorily mention the reason. 143.4. That's why in basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. Getting it? In all the cases, we are specifically talking about why we took such course of action. Yes or no? And you have duty to sign the audit report. Who should sign? Only the partner of the firm should sign, who is a chartered accountant. And you have duty to comply with auditing standard. And you have duty to attend general meeting. The power is not for board meeting, only for general, AGM, EGM, whatever. The auditor has right to attend general meeting only when the accounts are discussed. Correct or incorrect? Incorrect. It doesn't matter whether accounts are being discussed, audit related stuff is being discussed, doesn't matter. It's a general meeting, shareholders meeting, that's it, I have right. What they are discussing, what is the agenda, irrelevant. Understood. Next. 143 subsection 12. If auditor has reason to believe, that an offense of fraud for 1 crore or above is committed in the company by officers or employees. Here, if the third party committed the fraud, is not applicable. On the company, somebody has done fraud. Who is that somebody? Employees of the company, officer of the company. But you see, Caro, reporting of frauds, whether the company has, whether the auditor has, whether any frauds on the company or any frauds by the company were noticed or reported during the year. Which frauds? Frauds identified by the company. That fraud may be committed by third party on the company, or company on the third party, or employer officer on the company, or employee officer on the third party. Doesn't matter. But here, fraud committed in the company by officer or employee. Are you getting it? On the company, fraud has been committed by officers. Some officers of the company, used their power and exploited money. You discovered that. Who discovered? You discovered. And the amount involved is more than 1 crore. You have to report to central government. First, within 2 days, inform to board of directors. Ask their explanation within 45 days. And after you got the explanation, forward a report to central government within next 15 days. Sir, I failed to get any reply, sir, from directors. Okay, directly report to central government. Mention a point that I told to directors, but directors did not responded. All these points you inform in when? ADT 4. Able to understand. So this point is not required. Next, if the fraud is less than 1 crore, the auditor shall report. Okay, shall report the matter to audit committee or board of directors. In other cases, means if audit committee is there, first report to audit committee. Otherwise, board of directors. Within 2 days of knowledge. On this one MCQ I saw, which is very funny. If auditor identified a fraud for less than 1 crore, the fraud shall be reported to option A, audit committee, option B, board of directors, option C, A or B, option D, A and B. If I have to say one option is right, remaining should be wrong. Yes or no? The option is there, A and B. I'll report to both. What happens? What will happen if I report to both? Do anybody punishes me? Is there a violation? I report to everybody. What happens? I'll report to audit committee and board. Nothing wrong, right? But since the word or is used, answer is A or B. After looking at this answer, first of all, after looking at this question, I understood he is a super senior citizen who has to sleep on the bed. But coming and setting up the paper by asking this kind of stupid questions. Is there any significance here, or is there any? Suppose no. You went to a hotel. Sir, idli venuma, dosa venuma ketta. Idhula renditlo onnu da choose panna mudiyuma? You can choose both, right? There he is asking, you want idli or dosa? Or means, hey, only one only I should choose. Because he used the word or. Can you interpret like that? There are some words or and you should not interpret them. There is no meaning. They are just like, for filling the sentence it will come. There is no significance for the word. Here there is no significance for the word or. Is it about talking about conditions or complaints? No. Understood or not? Now, You need to inform to board nature of fraud, amount involved, parties involved. Directors have to give in their board report what is the nature of fraud, amount, parties, what actions the company has taken. Next. Now this requirement is applicable for cost auditor as well as secretarial auditor. What if there is a non-compliance on this? In case of listed company, penalty up to 5 lakhs. In case of other company, penalty up to 1 lakh. This penalty provision is important. Getting it? 140 subsection 3 resignation time. We discussed one penalty, variable penalty, that one and this one. This is important. Next, audit of branch accounts. I told you when branch accounts will be applicable. First of all, when branch audit concept will come into picture. Okay, my company has branch account separately and I want to appoint a separate branch auditor. Whom I can appoint? First of all, my branch audit, who can do? If possible, my auditor will do, main auditor. He is not interested. I will appoint another CA having COP. Suppose my branch is outside India. That branch audit, no, my company auditor alone will go and do. Or I will appoint another chartered accountant having COP. Or I will appoint another person who is qualified to act as an auditor in accordance with the law of that country. Understood or not? Over. In case of a foreign branch, the audit of that branch can be conducted by either the company auditor or another chartered accountant having COP. Full stop. Correct or incorrect? Incorrect. It can be audited even by any other person holding that auditor qualification as per the law of that country. Understood how a question can come? Now who will appoint branch auditor? Same, shareholders only. Members only will appoint. Getting it? However, shareholders can delegate the power to board of directors. Now what are the reporting requirements? Same reporting requirements like main auditor. He also have to report on 143 checklist items, 143.11 CARO, fraud reporting, everything applies to him. Are you getting it? Now, whenever branch auditor is there, the principal auditor has to perform certain procedures to get information from the branch auditor. The principal auditor will inform other auditor what are all special areas. I will tell him what are all special areas. You focus on this. Okay, especially focus on inter-branch transactions. We should make arrangement for coordination. You WhatsApp me every time whenever you have an issue. I will WhatsApp you. We should make a coordination. Yes or no? And I will also inform other auditor what are all the reporting requirements applicable for the company. He may not have an idea what are all reporting requirements for the company. And I will get a written summary from the branch auditor regarding what are all he did. We may do this, we may not do this. If at all principal auditor still want to know more, he can visit to the branch. He can go and visit the other auditor and branch. Just because branch auditor is appointed, is principal auditor prohibited to visit a branch? He still have right to visit branch, right to audit. He can ignore branch audit report. I will do audit once again. No problem. Are you clear? That's it. Then internal auditor, for which companies it is compulsory, it has been given here. Getting it? Public companies, unlisted public companies, private companies and listed companies. Who can act as an internal auditor? He may be a CA, he may be a cost accountant, practice or not, or any other professional. MBA candidate can be an internal auditor. No specific qualification for internal auditor. It is not compulsory, only CA should act. Further, internal auditor may or may not be, which means I can recruit one CA permanently and employ him. So he can be my employee as an internal auditor, or I will outsource my internal audit work to a firm of chartered accountants. Anything it can happen. And all this true or false question might come. Are you clear? Now, what is the concept of internal audit? All that you have in risk assessment chapter. You are having in risk assessment chapter. I told if I have time, I'll discuss that. Next, auditor's remuneration. Who will fix the remuneration? The audit remuneration shall be fixed in general meeting by members, or members will fix manner how it shall be fixed. Suppose member said, no sir, we will not fix. Board of directors, you please fix. Then board of directors will fix. But ultimately, who should give this power? Members. Getting it? And remuneration includes what and all? Expenses incurred by auditor in connection with audit and any facility. If auditor is incurring any expenditure, traveling, transport, stay, hoteling, and that amount is reimbursed by company, that expenditure is also treated as part of auditor's remuneration. So, remuneration includes facility given to him. Whatever facility given to him in income tax, you might have seen non-monetary perquisites. So whatever perquisites we are giving to auditor, that is also be treated as a remuneration given to auditor. Next, maintenance of cost records. This is regarding cost records and cost audit. What are they saying here? For which companies cost records first of all apply? Trading companies, purely a company which is engaged purely in trading, cost record do not apply. Only for companies engaged in manufacturing or providing services. You are creating something. You are creating something. Now, moreover, which has overall turnover from all the products and services 35 crore or more during the immediately preceding financial year. In the last year, if the company is having 35 crore or more turnover from all the products, aggregate turnover, then only cost records will apply. Then only the company shall maintain cost records. However, if a company is classified as micro enterprise or small enterprise, not medium, only micro and small, which are covered under MSME Act, they are exempted from this cost records. Now, what about cost audit applicability? What about cost audit applicability? The companies which are engaged in production or providing services, these companies were divided into two categories: regulated sector, non-regulated sector. Companies that fall under regulated sectors, companies that fall under non-regulated sector. Okay, so there is a list of companies given which fall under regulated, which fall under non-regulated. So that list we have to see in real life and then accordingly decide. Now, cost audit applicability for companies which fall under regulated sector. What is the applicability criteria? If the total turnover in the last financial year is 50 crore or more and aggregate turnover or from the products and services covered in the sector is 25 crore or more. Example, Reliance Industries you take. Reliance Industries you take. It is dealing with garments. It is dealing with petroleum. Garment is non-regulated sector, whereas petroleum is covered by Petroleum and Gas Board, regulated sector. Getting it? Now suppose Reliance is totally having turnover 60 crore, let us assume. 60 crore is the total turnover of the company. But from the product covered in regulated sector, how much from that minimum should be there? 25 crore minimum. Minimum this 25 must be there. Total must be more than 50. Then only we will call it as regulated sector. Cost audit is applicable. Suppose if this limit do not satisfy. If this limit do not satisfy, then check the non-regulated criteria. Overall turnover how much? 100 crore or more? Yes. Plus. Now they are covered in non-regulated sector, no? Companies. The businesses were there, no? Which are covered under non-regulated sector. From that business, how much is the turnover? More than or equal to 35 crore. Overall more than 100 crore. This is more than or equal to 35 crore. From non-regulated, both the conditions satisfied. Then cost audit is compulsory. Simple. Understood the logic or not? All of you. Now, sir, I satisfied either regulated sector criteria or a non-regulated sector criteria. Logically speaking, cost audit apply to me. But I was given exemption. This is important for correct or incorrect question or 3 marks question. I am actually satisfying the limits. My turnover, I am a regulated sector company. Overall turnover 100 crore. Regulated sector turnover 50 crore. More than 50, more than 25. Cost audit is applicable. But I got exemption. I will not appoint cost auditor because my major revenue, minimum 75% of the revenue I am getting in foreign exchange, I am exempted. Or I am operating in special economic zone, I am exempted. Or I am actually an electricity generation company. I'm a company, I'm a company where I am doing manufacturing process of only one thing, electricity generation. That too, why am I generating electricity generation, for captive consumption. Example, wherever company has installed solar plants, every company that has installed solar panels above their offices, all of them are manufacturing electricity, indirectly. Now, do they come under regulated, non-regulated, all the discussion? Suppose mine is an IT company, information technology company. I have installed complete, glass building. That glass is completely solar glasses. It's completely solar. Every year approximately I will generate, my company turnover is more than 100 crore. My company turnover is more than 100 crore. 500 crore I have, 1000 crore I have. And I am generating through the glasses electricity worth of more than 25 crore. More than 35 crore, some amount. Now, can you call me manufacturer and then put me cost audit, all that? No. I am generating this for my personal consumption, not for commercial sale. Are you getting it? So, for these companies also it is exempted. Now, who can be appointed as a cost auditor? Only a cost accountant who is in practice, provided that person is not appointed as a company auditor for conducting audit of financials. Suppose my firm is there. I have 6 chartered accountant partners, 4 cost accountant partners. We are majority CS, no? For one company, we are stat auditors. Same company shall not appoint us as a cost auditor. Qualifications, disqualification, rights, everything is similar to stat auditor. Who will appoint cost auditor? Board of directors. If audit committee is there, board will appoint after taking recommendations of audit committee. Time limit for appointment within 180 days from the commencement of financial year. Once you appointed, inform to central government within 30 days. What is the tenure of the cost auditor? End of the year within 180 days. From the end of the year, closure of the year, 180 days, or till he submits cost audit report, whichever is earlier. Whichever is earlier you can interpret. Are you clear? Sir, we appointed cost auditor, sir. Casual vacancy raised. Same reasons like company auditor. Casual vacancy. Board of directors will fill within 30 days and will inform to the central government in CRA 2. Removal. The cost auditor may be removed before expiry of term through board resolution after giving opportunity of being heard. Now, cost auditor will submit cost auditor report to board of directors. Board of directors shall submit that report to central government. And government, no, they may call for additional information if at all necessary. Cost auditor also have duty to report on fraud. Easy. Clear? Next. This point, special notice point, all that we have covered. Penalty for non-compliance under section 147. Under section 147 of the Companies Act. So what is the penalty in the hands of the company? Minimum fine not less than 25, but which may extend to 5 lakhs. If at all company contravened with all these 139 to 146. Example, company has to take recommendation. Board of directors have to take recommendation of audit committee, but they didn't take. They didn't take at all. Suppose if they take recommendation, later argued and completed and okay. So board of directors did not consider audit committee itself. Getting the point? It's a violation. How much penalty? Minimum 25, maximum 5 lakhs in the hands of the company. Whoever officer, because of him this contravention happened, he is liable for minimum 10,000 penalty, which may extend to 1 lakh, or he may even liable for 1 year imprisonment, or both. Suppose if auditor contravened with 139, getting it? You have to give declarations, free consent and all. You didn't do that proper declarations. Okay, you are not liable for appointment under rotation. Still you accepted appointment. You are providing one prohibited services. You are not signing. Your staff member is signing the audit report. Violation. Getting 143. Your rights and duties you are not fulfilling. Then if it is unintentional, 25,000 minimum, but which may extend to 5 lakhs or 4 times the remuneration, whichever is less. Suppose you intentionally did. You contravened with intentionally in order to defraud shareholder, defraud creditors, defraud tax authorities. Minimum fine 50,000, maximum 25 lakhs or 8 times the remuneration, whichever is less. Maximum remuneration is 25 lakhs. Yes or no? Now, if at all you proved under subsection 2, where auditor has any convicted under subsection 2, he shall be liable to pay, refund the remuneration, pay damages for the statutory bodies, authorities, creditors for the loss arising out of misleading information. You have to pay damages to third parties as well. Now you see here, if it is intentional, imprisonment up to 1 year might come, and the word is end. Compulsory imprisonment. Compulsory, if you intentionally contravened, compulsory imprisonment. Now imprisonment, is it for only the partner who involved or every partner of the firm? criminal liability only concerned partner. Criminal liability means what? Imprisonment. Civil liability means what? Payment of fine. With respect to civil liability, the civil liability in audit of a company, getting it, the civil liability will be generally partner or partners jointly and severally. General provision. Civil and criminal liabilities joint and several. General. Specifically they clarified if it is in case of an audit firm, criminal liability shall only be exercised with the concerned partner who acted in fraudulent manner. Are you getting the point? That's it. This is 147 provision. Are you all clear? With this company audit reporting is also completely discussed. Easy. That's it.